Hello, everyone. Hi, my name is Michael Ducon. I'm a sales director with Creatio, and I will be your host for today. And I'm very honored to give that introduction for our No Code Finserv Day around financial services and how no code technology can be an enabler in digital transformation initiatives, in particular around the financial services and banking industry. So, as the opening remarks, as I am your main host, I will be very happy to give you some introduction of some of great speakers that we have today, from customers to peers to partners and analysts that all have great insights to share around financial services and how no code can help companies accelerate. And let me briefly give you a peek of our rich agenda for today. So for today, we will have a shared session. First, we'll have a trendsetter session with Devi Mohan that I'll be happy to introduce in a minute. And we will also have a keynote around creating a no-code bank for the future. And after those first presentation, we will have guided tracks on different themes that you will have the choice, you as an attendee, to follow one, if not several, of those different tracks that we've really tailored to different personas and different areas around financial services and some challenges that you might have to tackle with technology and business drivers. So we will have two sessions with different tracks available for you to join. The first one is going to be around 11:20 a.m. Eastern, or depending on where you're located. One will be on consumer banking, business banking, customer experience. So you will have the choice to join one of those three tracks. And then later around 1 p.m. Eastern, we will have also other tracks dedicated on lending, loan recovery and payments, governance and compliance, as well as corporate functions. Okay, so we will not lose more time, and I will be very happy to give you first an introduction of Devi Mohan. So Devi is a passionate fintech speaker. She's experienced in both the traditional world of financial services and fintech, especially working closely with fintech startups. She's also the co-founder of Burnmark, which is a global fintech research company that supplies fintech trends and markets to also help banks and enterprises around the world. And she also spends her time analyzing, dissecting the fintech industry, working closely with a lot of organizations around the globe, and working with startups, bank investors, also trying to help them, be more competitive in that space. So I will not lose more time as well, and have the honor of having Devi kickstarting the first trendsetter session. And we will also have our global growth manager, Andy Dovgan, who will join and interview Devi. So Devi, the floor is yours, and have a good talk.
So much, Michael. It's a pleasure to be here and introduce you to the world of banking 2025 and what I think is going to happen in the next few years based on the trends that we see. I will share my presentation. Brilliant. I think all of us have gone through some immense change in the last couple of years, whether you're an individual or an organization. And it's quite interesting to me because when I work with banks, it's the same kind of question that I get asked in the last few months. In every meeting, the question is, what's going to happen next? Because we've all been hit by this black swan event and completely unexpected, surprising event in the last 2 years that have affected the way we work, the way we look at customer experience, and the speed of the need for digitalization. So with all that that has happened, I'm hoping to give you an overview, or at least my feedback on the trends that will drive the ecosystem of digital banking forward. One of the first things that I see in the world, whether it's banking or any of the sectors that we can look at, is uneven innovation. Uneven innovation is when one side of the ecosystem is innovating so much faster than the others that it's actually quite uneven in terms of customer experience when we look at it. An example is traditional banking and fintech. They both play in the same sphere. Customers use Uber and Google and Airbnb, and they also go to the banking apps on their phone at the same time. So what the customers view is really uneven. The way we see B2C fintech, the consumer fintech, is quite different also from the way we see business to business fintech. So the back end of all of the banks and fintechs and all of the network and the infrastructure. This is especially true for global banks around the world, especially the large corporate banks. We're seeing a world of declining profits and dropping fees and channels being affected in terms of their revenues. And the way forward, I think it's quite clear to all of us in that we have to go digital. 86% of global banking executives do believe that digital is the way forward. However, how many of them are quite there yet? Only 43% out of them have a proper digital strategy in place, and only 19% of them have an actual digital capability to rival the Ubers and Airbnbs and the fintechs of the world. So we always find that disparity in the banking ecosystem, in that there is a desire to be more digital, to innovate faster, but the capabilities are not quite there. And added to that, we have a huge burden of compliance with so many new regulations coming up around the world. And especially in America, as you may be familiar with, the amount of new regulations around privacy and security coming up in the last few years, and almost on a state-by-state basis. You have the California Privacy Act to worry about, to the federal laws, to the global laws. So it's actually quite complex, and the rate at which regulations are changing, that's quite steep as well at the moment. And then you have the competition from the world of fintechs, both B2C and B2B. One of the trends that I've seen in the last couple of years is that the B2B fintechs, the ones that actually work on the back end or the middle office and the supporting the front office functions of a bank, those are the ones that are increasingly getting unicorn status. So we have the competition on one side, and also the business to business fintechs growing in a huge number, supporting technology innovation. And as you know, in the last year or so, our behavior has increasingly changed as well. There was a lot of panic and headlines around the world when WhatsApp went out of service yesterday for 6 hours, at least in the UK. But in general, the social media usage has gone up significantly in the last year, especially with WhatsApp and Google and Instagram. Digital shopping, I don't have to say. I mean, Amazon has seen sales like never before. The supporting logistics, the postal service has never seen revenues like they did last year. So all of this is driving the changes that we're going to see in the next 5 years. Now let's talk about banking transformation. Right? So transformation can happen across any sphere, but what do I think is going to happen in the next few years? One of the biggest changes I'm seeing at the moment is the way in which payment systems and products are being adopted. Last year, 13 million people made their first ever online purchase in just 1 month using a Visa card. So if you can look at the amount of PayPal, who set a record last year for transactions, in terms of Visa and MasterCard and the major players, and some of the organizations like Walmart having their own cards, prepaid cards, payroll cards issued by HR organizations, all of this together, there is very, very clearly a payments boom. And this is especially true in the US compared to the UK. The UK is traditionally more into debit cards than credit cards and less into PayPal, etc. But I think especially in the US and Latin America, there is very, very clearly a payments boom happening. And that, for example, biometric cards is an interesting phenomenon that has happened in the last year, with a lot of these cards integrating features and technologies that never existed in the past. Geolocation is another feature that has been increasingly used last year. I worked on a project where we had to integrate geolocation into shopping behavior. So do you walk into a shop in that shopping mall, or do you walk into a shop in the middle of, on a standalone shop in the middle of the city? So, and what kind of purchases do you make when you go into that location versus this location? Geolocation, biometrics, digital payments, and AI-based credit scoring, tracking, all of that has been integrated so much into payments that I think there is definitely going to be an interesting boom in the next few years. The other thing, of course, in banking transformation, we always talk about lending. I think this is an interesting area from a bank point of view, especially because the SME lending has been traditionally such an undertapped area of banking. We have corporate lending, which is quite strong. We have individual lending, which is reasonably strong, and fintech's taking care of that market. But SME lending has traditionally been one of the weakest areas that have been catered to. Now, in the last year, especially in the UK, we have dispersed an enormous amount of loans, especially around NHS and saving businesses and supporting businesses that were going out of business, etc. Here in the UK and Europe, we also have a huge regulatory push around open banking and open APIs, which have made new players come in and use some of the data available with banks to help with lending products. So there's a lot of innovation that has happened around SME lending, and also specific lending around freelancers or small businesses, which could be just an individual as well. So this is another area where I think the use of data is going to be very, very interesting. I don't probably need to tell you this, but credit scoring for loans and for insurance purposes have changed a lot in the last few years. And one of the things that banks increasingly use is behavior data. So data from the way you use your phone, how many apps you have, what kind of battery levels do you keep on your phone, what kind of bookmarks do you have stored, how is your social media data. We don't normally look at terms and conditions when we accept downloading of apps, but all of this data is being captured to provide better lending or more effective and efficient lending and credit scoring products. So it is an area that is, again, using a lot more interesting data than ever before. The other area, I think, which has seen a lot of transformation in the last year is KYC. Almost every bank I've spoken to in the last few months have had some kind of an eKYC transformation because of COVID. So a lot of banks have launched dynamic selfie-based KYC for the first time. A lot of banks have had to scrap physical IDs or coming into branches for verification. New KYC APIs had to be brought in to support this documentation or e-documentation, and also using the data that was being uploaded. You have a dynamic selfie, great, but how do you use the information from the dynamic selfie to understand your behavior, your personality, and also for KYC purposes? So RegTech and KYC and associated activities like fraud and identity management and biometrics, that has seen a huge boom. And this is something I expect to continue to see as well. So banks are focusing on three main areas, I would say, in terms of the transformation. Of course, technology. I mean, technology is such a broad term now. I think we need to think about specific use cases that work for each bank and all of us. And one of the things that I always find is that the technology around each product line that we see, for example, payments, lending, insurance, mortgages, or digital wealth, all of that is great, but I see a shift in terms of the focus towards transforming with the customer journey in mind and not just a product line. So what happens today is the transformation happens, for example, from the point of view of an SME, not from the point of view of payments for an SME. So that shift is one of the biggest changes we have ever seen in banking in the last 100 years, where we're shifting away from products, talking about rates, selling individual products and bundles, but actually talking more about how is the customer going to benefit from it? And that is why the SME lending and freelancer lending and all of that is gaining traction, is precisely because of that. Now, the second thing that, again, it's partly COVID, but I don't think it's fully COVID, because this shift started quite a while ago and it's gaining momentum now, is the focus on environmental, social, and governance. And this is, I think, a much needed awakening in the world in terms of ESG considerations, and also looking at the way companies are run and the kind of clients they serve and the kind of values they have. And that focus is quite interesting, especially to me personally, to see most banks now adopting that view. And I think that's going to affect the way transformation works as well. And also, the other thing that I see is using data in a better way, especially for low value transactions. Now, this is an area where fintechs do really, really well in terms of dealing with low value loans or smaller mortgage amounts or low value transactions in payments. But now banks are also trying to get into that space, targeting clients with those kind of low value transactions. And most banks have actually launched digital products in the last 1 year. So all of these 3 examples are from last year, in that Lloyds Bank, they made a big push towards getting more people signed up on online banking. I'll talk about the US later, because it's slightly different in what happened in the US in banking. But in the UK, at least, we have seen a lot of adoption of the traditional banking apps, not just the challenger banking apps. And some people actually launched their own digital banking subsidiaries and separate brands to deal with that. I don't need to talk about challenger banks too much. Happy to talk more about them, because, I mean, some people in the UK may be quite interested in some of these banks and how they've done in the last couple of years. But one of the things we find is that people who run marketplaces actually did very, very well in the last year. For example, Starling Bank. But other than that, we actually don't have a huge traction this year in terms of challenger banks doing well. That's mainly because people are not traveling. They don't need to use apps necessarily, and they don't need to use travel lounges or offers given by challenger banks. But in general, the downloads have gone down. Traditional bank apps, the downloads have gone up. And the people who are doing well are the marketplace banks in the challenger banking world. Now, the US, as I said, is slightly different, because in the US, unlike the UK, there is a huge wave of big techs, the Amazons, the Facebooks, and the Googles, and the Apples trying to get a pie of the banking experience. So in the UK, for example, it's always a conversation of traditional bank versus challenger bank or fintech. But in the US, the conversation is usually about traditional bank versus big tech. So the kind of approach in the US I've seen banks take is slightly different. It was quite interesting to me that Google actually launched their own platform. It's a front-end experience that they launched in the US last year with 6 banks, but increasing in number. I think the plan is to get the smaller banks, the community banks, into that platform so they have a good front end and a good sales experience, but the back end is taken care of by the bank itself. Now, I don't need to kind of say the way forward is, of course, going to be collaboration, because it's not a one-to-one game anymore. Like I said, big techs are involved, regulators are involved, startups are increasingly collaborating with fintechs. So in the next 5 years, I think the people who will survive, the people who will do well, are the people who will collaborate better. And marketplace is a great example. The reason why challenger banks with marketplaces did so well last year is precisely because of this. They're not going to market as one product. They're going to market as a bundle of products in partnership with a wide variety of companies. So any kind of partnership that we see in the market, especially between a bank and bank, or bank and a fintech, is going to be quite exciting. We see all kinds of partnerships happening now. And that partnership is not just from a company point of view, or regulatory point of view, it's also from an individual use case basis. I mean, a lot of credit scoring for lending is now done by fintechs, not by the banks themselves. There are a lot of companies who launch products like Scotiabank and Cabbage launched their own loan product. It's called a Cabbage loan product, but it's run by Scotiabank. It's on their website. And the same with the backend operations like treasury. A lot of that collaboration that we don't see is actually done by fintechs. For example, reconciliating payments coming in with the invoice sent in earlier is done using AI and companies like KeyBank and Everett. So a lot of those kind of partnerships that we don't necessarily see, managing the cash flow and managing the platform and the invoicing, the reconciliation, the boring stuff in the back end is also done by fintech. And I think B2B fintech is definitely the future. At least the numbers that we see very clearly heading towards B2B rather than B2C in the fintech world. I think there are 5 types of partnerships that really, really work. Again, this will change in the next few years as more kinds of collaboration exercises evolve. The easiest thing that banks do is launch a separate brand or a separate subsidiary to deal with the need of a set of customers or a target market. Channel partnerships, where you work with channels run by fintechs, but everything else is done by the traditional bank. Technology partnership, you buy the technology from someone else instead of building it yourself. Then you have product partnerships where you build products together, like the Scotiabank Cabbage example, and experience partnership where the front end experience is done by a fintech, but everything else by the bank. Now, these kind of partnerships work really well because banks are extremely good at the regulatory framework side, managing reporting and regulations and compliance. And fintechs are really good at the experience side. So those kind of partnerships really work well, at least in Europe and in the US, of course, with Moban and Simple. There are some really great examples of those kind of partnerships. What do I think will happen in the future? I think every country in the world is heading towards a cashless society. I think that's the desire. It's not always practical. I'm not advocating a fully cashless society, mainly because we have to make sure we don't leave out any target market that requires cash access, like senior citizens in the UK or people not educated or not having access to smartphones. The other major thing I see in the future, as I mentioned before, is ESG. It's interesting to me that ESG funds are now outperforming traditional funds. So the moment they started outperforming, which has been a trajectory that was set 10 years ago, it's going to be kind of the future of investment and the kind of focus for banks' transformation programs. SME, I mentioned that too, as a key driver of transformation, primarily because it's an untapped market and one of the fastest growing target markets in the world. There's a heavy wealth transfer coming the way, especially with COVID. We had a huge number of new robo-advisors, will writing companies, life insurance companies come up. So it is partly behavior, but also partly generation, a large population now getting old. And that wealth transfer has to be managed through digital means, through digital channels and robo-advisors, supporting them along with the traditional channels. Big techs rising up to control finance, but not by taking a license. They're not going to turn into banks, but they will act like a bank, trying to support you in that consumer finance journey by offering you small loans or payment channels and also offering the front end. And AI to me is disappearing as a hype word now. I think AI is everywhere in every single bank in the world, either in the front end or the back end. So the new hype is going to be quantum computing, which many, many banks are experimenting with. And the research in the last year has really grown by leaps and bounds. So I think this is what we're going to see based on the data and the trends we have looked at. And yes, I think the next few years definitely will be one of collaboration and where people work together to make some of the consumer challenges disappear. Thank you. And I'm happy to answer some of the questions that have come up. I think I'll pick a couple of questions and then
yeah, David. So I'm happy to help. And
brilliant. Thank you, Auntie.
Thank you so much for a very thoughtful and very wide presentation with lots of great nuggets. So what I've tried to do, I've tried to consolidate some of the questions we received from the chat, but also within the course of the previous week, I spoke to a number of our customers, larger banks and smaller banks, and I asked them, so if you'd ask one question to an expert in technology and future of banking, what question would you ask? And I actually got those for you. So I understand that we are kind of a little bit tight on time, so that's why we'll try to go through all of them. So I guess the question from a larger bank, one of our customers, and the biggest concern was related to moving from legacy. So from one hand, everyone understands in the industry that those digital workflows, this automation, it's a new reality. But in the meantime, they have such a huge bag of legacy technology, silos, processes, and the biggest challenge that they have is how to work with that. And that's actually to your earlier point, some of organizations just decide to set up a separate institution managed by the same organization, not to deal with the legacy. But is there any other way to deal with that legacy and accelerate the transformation?
Yeah, I mean, and that is exactly why we see that gap of desire to be digital, but not quite there yet. And that's legacy that's stopping them from doing it, and data being in silos. There are three ways in which you can manage that. One, as you rightly said, Andy, it's by launching that separate bank from scratch. You build this most agile and beautiful tech stack, or you buy it, and then you build the products that you want for a niche market. So building a new bank from scratch is the way that people love to do it. Having said that, we have seen a few failures of them. I don't want to name names, but in the US, a major bank did that last year and they shut down. In the UK, we have seen 3 banks do that and shut down. So clearly, customer acquisition is a problem, even with a separate new cool brand. The 2 other ways in which we can do that is one, through replacement of legacy one by one. So shutting off mainframe by mainframe. I mean, there are banks with 200, 300 legacy systems in one product group here. So this is going to take 20 years. So this is the process that several banks are on today. It's not even, a suggestion, because most of the banks are already doing it, but it is a 20 to 25 year transformation program. The third method, which is what I personally like the most of the 3 options, is building a digital platform on top of legacy in order to plug in what you need to plug in. Now, the good thing is that those kind of platforms exist today, and they have really good capabilities. But then you don't need to transform legacy immediately, and you will have APIs that you can plug in. You can plug in new types of core banking or consumer management products really easily. So having a digital platform on top of your legacy to deal with the fintechs and the APIs available is probably the easiest short-term way of dealing with that if you're not trying to launch a subsidiary.
Yeah, got it. So then another question is coming more from a smaller community banks, right, that serve a special state or even a special city or a town. And I guess what keeps them up at night is this necessity of being competitive and relevant in a face of larger, massive, consolidated financial groups, right? So what is your take and what are your thoughts, like if you to advise to a community bank, and specifically here in the US, there are like 24,000 or even a little bit more of those, in regards to how to compete with those organizations that have larger budgets, more resources, and of course they can really invest into that much bigger money and power.
No, I think I actually feel quite sorry for the community banks. And in the UK, we have the building societies, which are the similar size, because you have competition from both sides. You have the large banks who target the corporate sides and the global customers. And then you have the fintechs actually taking over the smaller customers and putting price pressure on you. So I think the community banks will survive only if they form some kind of network or partnership with each other, which is exactly what we are seeing with Google driving that in the US. I think Google or any of the big techs, any of the big names, even Goldman Sachs is trying to do that. is bring together community banks as much as possible so that they have economies of scale. An example in Europe, which I find really fascinating, is there is a network of community banks and building societies who have all come together for international payments. So this is a community that actually gets the best rate for foreign exchange, and it's like a utility. So you open the tap, you get water. You on the day you're given the best price based on all the people available in that group. So economies of scale can be achieved in payments and credit scoring, etc., if you do come together. So I think survival is a big question mark for most of these community banks, and I think a lot of them are going digital. But I think the only way survival will happen is if it's a common platform or they come together as a community.
Well, it sounds like they need to act now, right? And like they need to fight now. Got it. Let us probably tap on a few questions from the chat. So there is one question related to COVID-19 and long-term impact of COVID-19 into the financial service industry in general. So David, what are your thoughts about that? Will it gone sometime, or we already got changed, and what is coming next?
I think COVID-19, I mean, I like to be positive about things. I think it has created a lot of positive changes in the banking industry, and the push for digital is something that we have never seen before, thanks to COVID. Most of them have gone off branches. We are seeing eKYC integrated into apps in a very effective way. There are some countries, for example, like India, who never allowed eKYC in the past. Germany, etc. And now the regulations have changed to deal with COVID and eKYC. So this kind of push, I mean, I'm in a way, I'm thankful for that push that has happened. So I think in terms of digitalization, it's not bad news. I think by 2024, we will see a recovery in terms of travel and retail, physical retail, not online, and other things. So I think 2024 is when we expect recovery to happen in terms of consumer spend and consumer behavior. But the long-term effects, I think changing to cashless is actually a short-term effect. Payments, I think, will be not majorly impacted. And the reason I say that is we've looked at China and the way consumers are behaving in China. So there was a huge push, if you remember, in the early days of COVID, for people not to use cash at all in China. Yeah. And when we look at the data now, after 1 year, people have gone back to using cash. Yeah, so I think it was a short-term effect of not using cash, not a long-term one. So I do suspect that we will go back to pre-COVID levels of payments.
Got it. All right, another question from the chat. So your thoughts and suggestions on building organizational resilience with collaboration with technology vendors, right? So all recommendations, a relatively wide question, but all recommendations related to becoming more resilient as a bank or a financial institution.
I think collaboration works best when you know exactly what you're looking for. So like I said, are you going to launch a product together? If you're going to launch a product together, let the person who is good at product drive it. If you both try to be equal in the relationship, it may not work. So what is the purpose of that collaboration? Is it product? Is it channel? Is it an experience? Is it better data? I mean, whatever the reason is, that has to be clear, and who is the person with the core capability for that. And another problem that we always hear about is cultural misalignment between banks and fintechs. So don't try to take fintechs into the bank's office to work there. I think that's always a problem. I think fintechs need to still be agile and still work like a startup, while banks have to focus on the core capabilities, which is regulatory knowledge, the domain knowledge, and the amount of transactions and liquidity they have. So focus on your core competence is what I would say.
Yeah. I have the last question today. Unfortunately, the time is running very quickly because I had another dozens of questions from the chat and from my own list. But probably one of the most important and even emotional ones. So imagine a situation when you have like the organization needs to change, right? But then you have more kind of conservative leadership that wants to keep things as they were, and then they are, right? Because usually banks are not those organizations that really tap into innovation and growth and change without managing risks appropriately. So what would be your advice, how to kind of change this dynamic, how to change your mind, how to kind of engage and embrace this transformation and convince the leadership that it's time to invest into technology and introduce some changes?
Yeah, I mean, I think every organization has to take on digitalization in their own time frame. I think most banks and most large companies are there in terms of understanding the need for digitalization. Because one thing we tend to talk about a lot is technology and products, but we need to remember that in 10 years' time, we probably won't talk about technology because every bank needs to be technology based. So I think it is absolutely essential to change. Now, the time frame and pace of change could be different from organization to organization, but I think the rising competition from not just fintechs, the big techs, I mean, the Facebooks and the Amazons, who have a lot of resources at their disposal to come and take on banking. I think that should be a worry, definitely. The increased margin pressure in terms of profitability, in terms of international money exchange, in terms of transactions, the margins are very, very tight now. So how do you survive in a difficult market? And the only answer is digitalization.
David, it was a phenomenal presentation and lots of great suggestions. So thank you so much for joining our event, and hope to stay in touch with you.
No, thank you for having me, and it's been a pleasure. Thank you, Andy.
Thank you so much. All right. So as we move on, Mike, it's time for us to introduce the next session.
Great. Thank you, Andy. I think you're going to stay on the line with us because we're going to have another great session with you and Mr. Zambito. So let me share my screen again so we can see the agenda a little bit more. Let me know if there's any issue. Can you see my screen?
So right now, at least on my, yes, now we can see it.
Perfect. Great. So here we are. So for this next session, I'll have the pleasure to introduce you to two Andys, who are two of my esteemed colleagues. So Andy Dovga, that you've seen in a prior talk with Devi, is our Chief Growth Officer. Andy has more than 15 years of experience working with SaaS companies, a large experience, of course, working directly with Creatio customers, and has worked with all organizations that you can think of all around the globe, working as well a lot in EMEA and with financial services organization. And the second Andy Zambito, hi Andy, is our Chief Sales Officer Americas, who has worked at several different companies such as Pinpoint and Vera, also leading worldwide sales teams and being a Chief Revenue Officer, so also being directly working closely with our customers, trying to help them, tackle and solve them challenges. And I'm sure you're going to have some great insights from both of them and, how to create a no-code bank of the future. So Andy and Andy, the floor is yours, and I'll see you in a moment.
Thank you so much.
Andy, nice to see you. So it will be very easy to follow this presentation because our name is almost identical. So the one with really good deep voice is my friend Andy Zambita, the one with funny accent is me. So it's easy to follow. Let me go ahead and start sharing our deck, and we'll be on the ground in a second. All right, so we have a really interesting topic to discuss with you guys. So we are talking about creating a no-code bank of the future, right? And today, within this presentation, we're gonna cover three major aspects of that. So we will take a little bit of time and tell our perspective on what is going on with the industry, what are the challenges and perspectives that we have in the industry, and why it's now a good time for you to move into this no-code future. After that, we will touch upon having this freedom of owning your automation and really utilizing a no-code approach in your organization. And we'll finish up with an overview of possible digital workflows that can be implemented and deployed in your industry. So we go from more industries down to concept, down to very practical recommendations. So let me kick off the conversation from the challenges. And I believe that Davey already mentioned a number of those, and they are very loud. Lots of industry experts and lots of analysts are talking about those, that right now the industry is going through a tremendous change, right? And as we briefly touched upon on this with Davey, the time to act, or the time to change, is now. And there are a number of pressures that kind of forcing those changes. And when we think about those, we usually think about increasing competition, ever-changed customer demand, and expectations of our customers, a little bit different workplace and environments that our employees expect from us as professionals in this space, but also specifics of accessing to the data. We already had this conversation about neobanks and about fintech and about all those changes that are going on in the industries. And of course, here are some really great and strong data points that demonstrate that from a customer acquisition point of view, neobanks and fintech organizations are growing really fast. And there is no surprise. One of the reasons why they have this ability to capitalize on this customer acquisition and really increase their presence and the market share is because they don't have legacy, right? They don't have those constraints and limitations that are usual for traditional financial services organizations. And with not having those constraints and with not having those limitations, of course, they can introduce changes much quicker. Like today, the focus of our discussion is mostly on technology, right? Imagine how easy it is to deploy a technology if you don't have your legacy core banking system, or you don't need to go through this painful process of integration with 12 or 18 different technologies and different data points. Of course, it's just a much different time to value. So no surprise that neobanks and fintech in general are growing and becoming a significant force in the market. Now, when we kind of change a little bit of our perspective and we look at a different kind of angle, we see that our customers are also not the same as they used to be. Right, before 5-10 years ago, the overall expectations around financial services were relatively straightforward. So not much personalization was expected, and also we didn't expect our banks or credit unions to know all those kind of data points about us and go deep in personalizing our offers. But now, according to multiple research data points, we see that not only our consumers and even business customers expect from us Amazon type of service, seamless, digital, hyper-personalized, very quick, right? But also they feel like the types of products and types of services offered by the current banks is not enough. It's a too narrowed range, and it's not customized to fit their specific needs and their specific expectations. And then we also have a big rise of new generations of buyers that have different agendas and different approach. And for them to move from one bank to another and to switch them, it's never been that easy. So the customer is in control, and we just have to admit it and have to raise our standards as high as we can to be competitive and relevant on the marketplace. But then when we look a little bit more on our employees and our workforce, we also see some significant changes and some significant constraints. So based on some research, we see that a number of applications that are being used by a relationship manager in a branch of a regular bank has been increased from 8 to 11. So imagine that our relationship managers need to go through 11 different applications to complete their workflow. It's a lot. And then we also see that some of our workers are spending more than an hour a day by only switching between tabs. So this is an incredibly big productivity loss. And then we also have a new generation of employees that just expect you to have those digital TikTok, Instagram like applications, because they don't see a difference between business world and then our kind of regular life, right? So that's why they're ready to work only for those companies that equip them with modern technologies. And just to illustrate you how difficult this can go, we just decided to take one of the simple process of customer onboarding and illustrate, even within automated scenario, how many applications and how many different solutions we need to switch. And this one, again, with already a number of modern systems in place. So as you're going through onboarding of your new customer, you start working with a request and you mix between CRM and core banking system. Then you go through client due diligence and you have CRM, your enterprise content management, core banking, KYC application. Then you go to the credit term setup, and that's where you use core banking and risk management. Then work with agreements through e-signature, ECMs, and then you set up accounts in the system, right? So it's even in this scenario, there's a constant kind of switch and constant necessity to work within multiple applications. And of course, it should be a better way. We should equip our employees with a more productive and efficient approach. And then let's, for a moment, take a head of executive leaders, of managers of those banks. So we see that still there's a big chunk of leaders that don't feel like they have enough of data to make educated decisions. They don't have enough of information, and the data is not fully integrated so that they can go and decide on new strategies, new processes, new suggestions, right? And even with all those efforts done, we still are not even 50% there, according to multiple data points. So as you can see, this pressure is coming from all possible angles, and it's not gonna get better. So for that, let us quickly come back to you guys. We know that you represent the industry and you have lots of things to say. And we have a quick poll for you that will be launched momentarily. So we want to ask you, what is your major challenge in your bank in 2021? So are you mostly concerned about fintech disruption, about ever-growing customer expectations, or employee productivity? Or you might be concerned about legacy technology and data visibility, or there is another thing that you're mostly focused on. So Andy Zambita, what do you believe is now the most important challenge within the industry?
Oh, wow. Well, you put me on the spot there. I would probably say, for me, I've talked to a lot of banks. There's the combination of the second and third are quite strong, meaning a lot of organizations have spent a lot of attention on the customer expectation, trying to make that customer experience great, and their employees are really focused on doing and delivering that. Yet the tools that they have internally create incredible degrees of frustration and challenge amongst their own internal employees. So I think for a lot of organizations, my guess is maybe number 3 might surprise us about in the answers here. But I'm certainly fascinated to see, because depending on, I think, where you are in the world and which angle in banking you focus on, fintech disruption is right there knocking at the door as well.
Yeah, I also agree with you. I think that employee productivity is super important part. And I remember a conversation with one of our customers here in the US, and he is a chief experience officer in a major credit union, and his point was just spot on. He mentioned to me in one of the discussions that, look, we work really hard on giving our customers this easy to use applications. Right. When we think about like mobile banking and all the technologies that we want our members to touch, they should be super easy to use. But when we think about our employees, why our approach should be different? Why our employees should be equipped with something that is different? Why do we expect them to have this outdated, like 90 years old kind of technologies that it takes ages to understand? So I do agree with you. Employee productivity is a very significant piece. I'm not sure whether we can see the results of the poll on our screen.
It looks like in the chat, Andy, we're getting live updates here, and right now, technology and data visibility is growing. It looks like with number 2 being the employee productivity, at least in the last update I saw.
Okay. Yeah. I see the same. I see that it's a combination of technology and data visibility, number 1, and then employee productivity. So if you want to elevate your technological maturity and discover new technology, you're certainly in the right place.
Wonderful.
Okay, so let's move on. Hopefully we'll see the final results, and let's move on to our new chapter.
Sure.
So Andy, take it.
Yeah, I'm happy to jump in here as well. You were kind about the voice comment. I've often been told I have a face for radio, so let's at least the voice matches. So when we talk about we've talked about these trends on some of the challenges side of it, but let's talk about the technology as was just evidenced by the poll there and the interest in data and technology. And there are certainly some major technological trends that banking is jumping on right now. We'll obviously be talking about no-code configuration quite a bit, and that's near and dear to us. But other areas there's a lot of movement towards how do we have better communications, whether that's with artificial intelligence and chatbot, or with reaching the customers where they are through omni-channel and being able to change omni-channel, not just start in one location, but move from chat to live and seamlessly back and forth. This creates a big pressure on having integrated cybersecurity. We're dealing with many more avenues of communication, and therefore we're sharing a lot of sensitive information. And with all those different access points, we have to have one. The customer is not going to allow for multiple checkpoints throughout this, right? And then all of this leads to business process automation. And if I look through the rest, I think machine learning is an interesting one because organizations, we saw access to data being a concern. At the same time, banks are pressured saying, I live on top of all of this data. Can I make better use of it? Can I push more to the cloud? And then, of course, the ever present conversations around blockchain of these new emerging technologies, which have great promise, but many organizations aren't really orchestrated to deal with right away. So you have all of these technological trends, and when you really step back and look at them, I think they showcase the more macro trends that tie into our earlier conversation about all of those are really about ultimately delivering, or the promise of them is to deliver that hyper-personalized experience. How do I talk to you where you are in a way that you want to be talked to, in that mechanism and on relevant data? Can I move you through the processes of the organization seamlessly? And can the folks that are interacting with you do that with one screen? I mean, gone are the days where somebody's like, hold on, I need to go check another system, and that your customers are going to be tolerant about that. And the last one about everyone being a developer, I think that macro trend, though, is really in saying, we need to engage our employees, our constituents differently, not as just a data point in an IT discussion of gathering information, but really bringing them to the forefront of knowing what the customer wants and needs, and can they directly impact that. So those are some macro trends that I think are very dominant from that technology. And this brings about the what we would talk about as the ultimate synergy in this no-code bank of the future. And on the left-hand side, you're seeing really all that relevant experience that, frankly, for many of us who have been at this for a long time, this was the original promise of CRM and technology. And the vision for many years ago is imagine a world where you could have that 360-degree view of your customer at any one point in time, have that real-time engagement with that customer, whether it be in a teller circumstance or now a mobile app, and have it be super personalized to them. On the other side of this, of course, is all of that seamless digital workflow. This doesn't work. We can't deliver on this promise if we're not in a seamless environment where the data flows just naturally through the different touch points. If we're siloed and not orchestrated, it just doesn't work. And so all of this promise is for that ultimate synergy of the future. So let's talk about the freedom for you as an institution and as individuals in that institution to own your automation. And this speaks to when we step back a moment, there's an overarching challenge that for those of us who've kind of been in technology for a long time, we have this accelerating group of knowledge workers in the world. This is now we're stepping away from just thinking about specific banking. We're talking about software in general, right? We have us on the business side, we have consumers, we are consumers, 1.7 billion knowledge workers in the world today. And we've created a demand for over 500 million apps, or a million ways to interact. And it just doesn't work anymore. In a world where there's only 25 million developers, the prior ways of delivering technology just frankly are broken and won't support supply and demand going forward. So something in this model has to change. And so what is it that is most logical to change to address this? Well, if you talk to the analyst community, and I apologize if the slides aren't updating in real time. Here we go. All right. So if we talk to the analyst community, they've already projected that in technology terms, this is today, right? By 2024, so in the next 2.5 to 3 years, low-code application development will be 65% of application development. So think about that, going from a world where it's a new concept and topic to in 3 years, again, in technology terms, that might as well be tomorrow. And that is, again, because of that supply and demand equation. So we're at the very front end of that, because today, only between 7 and 8% of this development has been done by low-code developers. So there's this immense need, and there's this amazing capability to do so. And it's a matter of really adopting it, and how quickly do organizations adopt it, because the rest of the world is moving this way. Will we be a part of it? Will all of us be a part of it? Now, I'll date myself a bit here, because when you think about when I entered the world of technology and software, we were still doing custom software development. And why were we doing that? Well, people had very unique challenges, and the best way to get what I want is I'm going to speak with that developer, I'm going to hire some third party, or I'll bring on that team, and we're going to build exactly what we need. We all know what came from that. It was a really long tail event. By the time we deployed it, we already had change requests piling up, and it was a constant kind of chasing our tail, and super costly to our organization. We built up large teams, or we had these large third parties. And eventually, many organizations kind of said, let's go the way of off-the-shelf, commercial off-the-shelf software. Let's go for packaged applications. Well, there was a trade-off for that, right? We were able to get to market faster. Hey, they've already built a lot of what I need. But the reality is it's maybe only 70% of what I need. So now I have this challenge of, okay, I have to accept that I'm not going to get all of it. And now I have to align with that organization and believe, is their roadmap, is their direction, is that aligned with my vision as best as it can? But I get at least this industrial strength third party who is at least minding the store and making sure it's up and running. The advent of no-code technology, and why I get personally so excited by this, is normally there is this trade-off in technology. I'm going to sacrifice all these capabilities for speed or some other trade-off. And in this case, no-code offers the ability to take the best elements of both of these while eliminating the biggest constraint. I can have all of the control of a custom development and get uniquely what I need, while also having the speed, cost advantages, and industrial strength nature of a packaged solution. So I now can engage where everyone is a developer. I can bring my own team's business analysts to bear. We can fit those requirements. We can reduce our silos, and we can change at rapid pace. It really is the best of both worlds colliding by this challenge. So what is a no-code company? I mean, we talk about it a lot. It is a digital-first organization where everyone in the organization plays a part in that development focus of what are we going to build, why are we going to build it, why is it going to operate the way it does. And the term that's being used now is that citizen developer. It's really just about engaging your citizenry and being able to move quickly for both new apps and processes. I can't emphasize how important the process side of this is. If you're just proliferating applications and technology, you're not really getting at the heart of what makes your business unique. And why is it different from some other business? Why is it valued differently, have different loyalty, different brand awareness? So we often get asked that question of, okay, so all of what you said is amazing, mom and apple pie. How do I go about doing that? And so when we think about this, is not a massive jumping off a cliff transformation. It really does follow a sequence of events that are embraceable by an organization. And the first one is just culturally accepting the fact that this is the future that we're going to have, engaging our business to just kind of document back and forth requirements is very different than saying we're going to engage them to be a part of this development process. And we're breaking down the barriers. We're saying as an organization, we're transformative. It's not you handle this and we handle this over here. It's one organization, one culture. And when you do that, then of course you need to then bring in no-code technology into your strategy. When it becomes a part of your strategy, you will find that the tactics and the execution will follow. But if it's not there, you certainly can't. It's kind of a prerequisite, if you will. Now, from a governance policy standpoint, there is a slight shift. And it's a minor one. It's instead of IT kind of controlling all this with kind of very rigid rollout structures, which may or may not be disruptive to the business, it's about saying who in the organization should have the ability and power to do which elements. Just think of role-based security in some of your other applications, and think about this in a broader spectrum of impacting the business from a no-code fashion. The delivery policies of how frequently do we want these updates? It allows for the ability now to do rapid iteration inside of the business, which is non-disruptive to your core technologies. This is not the old concept of we have to stop the presses at midnight to roll things out because it's going to be disruptive. This actually is quite the opposite and allows you, just like SaaS technology allows a vendor to roll out technology to all of the customers without any disruption. This allows your organization to operate that way now with your customers and kind of turn your business, a banking model, into more of a SaaS. How are we continuously bringing improvement without the disruption? You're able to then build a center of excellence where you continuously educate the teams. Yeah, sorry, I'll just wrap that up. And then, of course, mentor them through how does everybody get more and more embraced, as you'll always have early adopters, and then you want to bring the rest of the organization along with you. So that leads to our next poll. And I'll be curious here, but where are you in your no-code journey? If, as all those things we talked about are happening to us all in real time, whether we want them to or not, how is your organization embracing it, and where are you in this? Are you already down a path where you fully embrace this and you're doing quite a bit of work in this, or are you just now starting to actively implement this? Perhaps you're starting the journey and having those conversations, or frankly, this is a net new area for you and you're saying, okay, we have to do something and we're not yet started, and we're going to have those conversations. I don't know, Andy, for the audience today, do you have a hypothesis as to which answer will be the strongest?
Yeah. We recently did a big, as you know, Andy, report, low code, no code, like state of the market report. And we realized that majority of the audience was in those initial stages of the journey. Mm-hmm. But we don't know who has joined us, probably because it's a no-code event. Probably there are lots of people that already advanced. But there are two questions that I wanted to talk briefly about that were mentioned in the chat, and I believe they represent a really interesting points. And those are the questions that we usually hear from our customers. So the first question is about how do you make sure that your low-code, no-code development doesn't turn into a digital anarchy? And by saying that, I believe that the biggest concern is mostly coming from IT departments and people that are responsible for administering and governing the ecosystem. And it's a very usual concern, because if you allow anybody to create those applications and digitize those processes, well, they will go and create lots of unconnected and even dangerous apps. So how to prevent it? And I believe that there are a few fundamental points and few recommendations. And then I'm sure Andy will be able to add his perspective.
Yeah, I'm happy to. I mean, I think of it this is, don't think of it as you're letting everyone loose inside the factory to start building things. It's really first and foremost about embracing your citizenry about the art of the possible. Because when your business users understand what they are capable of doing, they can have they'll be a more active participant in those conversations, whether they're ultimately the one who's putting fingers on keyboards to do this or not. You ultimately will still have business analysts that are more technically minded folks that are in the business themselves, where you may want to start with an authorization of this is where that'll take place. But by engaging the business and having them be aware of and be functionally proficient in understanding it, they can play a very active role in saying, hey, let's have a working session. I had these great ideas. I know that this is capable because of the other sessions we've had. Can we deploy this? and then you might have a small team that's responsible for the fingers on keyboards, particularly in the early days, because anarchy is certainly not the goal of this. At the same time, I'm also seeing any real-time results, and it's really interesting. We have clearly a winner here. Over 50%, by 55% are saying that they're at the starting point right now in the journey. Only about 10% so far say they haven't started at all. So we have a lot of folks that have already come on board with embracing this and are trying to now wrap their arms around it. And it looks like about 35% are somewhere already down the path of the journey, which I think aligns very well with kind of that Gartner prediction about where we'll be over the next 3 years, because it's not an overnight transition for everyone. But it looks like, at least with today's audience, not a lot of laggards that at least haven't begun those conversations.
It's exciting. It's exciting. So I also wanted to add a few points in regards to deploying a right citizen development program at your company. I'll make a few references, and we will move on. We'll certainly talk on this topic later today in our session. So if you haven't read yet, please check out one of the most recent Forbes articles, actually written about Creatio, how we implemented a no-code approach internally. We like to drink our own champagne, and we have been using no-code developers and have a very well thought no-code embracing strategy internally. Secondly, I also suggest you go and read materials from John Bradenkevic or from Jason Wong. John is from Forrester, Jason is from Gartner, and they have created tons of incredible materials around like how do you create a citizen development program? How do you make sure that the right people are being deployed? How do you ensure the review process and the deployment process? Lots of great stuff. So the good news is that it's still a pretty new subject. So there are lots of people that are contributing, but there are a lot of already foundational pieces being put together. So it's not that kind of a wild journey. And I think that no code is about democracy, not anarchy. And democracy does have guardrails and securities and controls to make sure that everyone can feel the freedom, but in the same time, your freedom is not restricted by someone else's freedom. So we will move on to the final piece of our presentation. And here we'll talk a little bit more about specific deployments and digital workflows that can be automated. You know what? Usually when we are talking about no code, and as you can see from this presentation, we are very excited about this topic because it's a significant change, is a big revolution that is happening in the market. And of course, we want to convince and convert all of you who haven't been converted yet to be followers of this no-code revolution. But the very pragmatic questions that we usually get from the audience is, where do I start, right? So you guys talk about the citizen development and those processes and those technologies. So where I can exactly deploy this application or approach, and where do I start? And for that, we put together what we call a digital workflow map for banking institutions, where you can see different, say, layers of the organization. So we have CRM, which is more customer-facing aspect of the business. We have front office automation, everything that is happening with product originations and actually serving the customer. We have middle office processes, and we also have corporate services aimed on employees of, say, a bank. And you can see there are lots of overlapping workflows that kind of sit between multiple areas. And you can see that we have kind of a wide range of different workflows that can be deployed. So what we suggest, you can mark each of those workflows for yourself and set up one of three options. Like, is this fully manual? Is this somehow automated through emails and some legacy systems or Excel files? Or do you have state-of-the-art technology to automate this workflow? Of course, the goal is to have the state-of-the-art technology being deployed in all areas of the business. So let's probably dig a little bit deeper into a specific outcomes and specific use cases that you can entertain and you can deploy for your organization. So end-to-end customer journey automation, that's where you are creating a single customer view. You're creating a consolidated UI to engage with your customers, both business organizations and private individuals, in a very relevant way. When you can, in 1 second, to see all the needed information, all the relevance that is on time with the right insight that can help you to turn that conversation into a meaningful consultation. We have next best actions, next best offers, and some other recommendations that are based on the data, but still take into account a deeply personalized approach. That's where you can use digital campaigns to drive customer acquisitions. We know that customer acquisition is a big priority for a lot of credit unions and banks and financial services companies, and that's where you also connect with your customers after the deal is completed to provide them with ongoing services and help them to address their issues and support the digital journey. So then another big aspect is front and middle office process excellence. So we all know that in a larger, specifically financial organizations, there are lots of steps that you need to go through, and there are lots of kind of connected workflows that you need to complete to get to a decision, because there are lots of risks that should be taken into consideration. And our goal is to provide you with a technology that allows you to move really quickly and seamlessly through those workflows without increasing the risk, but making sure that an organization can act as one and you can make all those quick decisions. We are doing that through flexible automation of your workflows using multiple tools. And of course, we help organizations to increase control, compliance, and transparency of operations. Everything related to know your customer, anti-money laundering, new regulations that are coming into play in different areas and geographies, and helping you to make quick decisions, but in the meantime, make sure that those decisions are well thought and well organized and well managed. So today, in our great event, we're going to touch upon multiple areas of those workflows, right? So we will talk about consumer-focused workflows, we'll talk about business customer-focused workflows, about middle office operations, and others. So when we boil down the benefits and the advantage of using no-code approach and automating your digital workflows, we usually talk about 3 major categories of those advantages. Increasing customer experience, because we all understand that the customer is a king, right? And we want to make sure that they have great level of engagement and great level of support to our organization. And we do that through responding to customers quickly, driving that customer experience. We are increasing operational excellence by increasing productivity and delivering seamless and more efficient operations. And of course, we increasing capacity of your IT organizations and delivering better flexibility. Because if I can engage my citizen developers to create those applications, and I can check, verify, and deploy them, then I can, with the same amount of people, I can deploy much more applications, and I can go to this digital world in a much quicker pace. And I wanted to share with you a few examples of what we've done with some prominent customers of ours and about their no-code journey. So this journey is with Bank GYT. It's one of the largest banks in Guatemala, in Central America. And you can see that the bank completed a number of steps in their journey. The important fact is that all of this automation is being managed by a small internal team of low-code and no-code developers. So the organization haven't initiated the process with a large implementation with outside company. They have done everything in-house with certain help and certain support, but they gained the full control and the full freedom over deploying those use cases and workflows. They started with a smaller user group for loan management for individual and businesses, then got promoted to vehicle loan management, compliance and complaints processes, new account openings for businesses and individuals, and then move to a credit cards automation workflows, right? All this journey happened in just a few months, right? So the company was able to scale it up from just 100 of users up to a few thousands, and now almost the entire organization uses Creatio for multiple workflows, and more importantly, does have this ability to go and deploy new use cases and new workflows. And similar example is with End Credit Union, and they have also an impressive no-code journey when they started with just handful of users for indirect member acquisition, a very specific use case that was completed, and then the application got scaled up to a much more workflows, mostly related to customer engagement and customer experience. What is important about End Credit Union is that you can see it's an enterprise-wide deployment that is being supported with just a small team of 3 experts, no-code developers, that deploys those applications and workflows quite rapidly and maintain control over the platform, right? So to launch those technologies, to launch those workflows, you don't need to have a massive team. You don't need to invest into building up another 300 people IT shop to be able to keep up with the demand. The modern technologies allow you to achieve that and kind of get it done more efficiently. So those are one of many stories that we love collecting from our customers, and we hope that one day we'll be able to write a story with you. And to close down our session today, which is not, of course, end of the event, it's just the very beginning of the event, we wanted to ask you a question. We wanted to ask you what workflows are the most relevant for you. So we have a number of options. Those are consumer related, business customer related, customer experience related, governance and compliance, corporate functions and middle office, as well as land and loan recovery and payments. So it would be great to know which area is of a big importance for you. AZ, so what are your thoughts? Based on your conversations with your customers, where do you see the most traction?
Wow, this we've got so many options here that are all good. I think the customer experience might show up quite heavily, although I just got off a call before the session and it was around governance and compliance. So even I can be wrong on this. I think it's going to be whatever is top of mind for as a challenge for that particular institution. All of these are areas where various degrees of automations have likely been put in place. And I think different banks have grown up with different cultural areas of focus. And so I think we're going to get an even spread. I don't think any one answer is going to jump off, but let's see if I'm wrong.
Yeah, so so far we see 50% for customer experience, as you rightly said.
You see, I'm wrong.
No, but you started with that, so we'll give you credit. And then 33% goes to governance and compliance, and 16.7% for consumer workflows. So yeah. Great stuff. I think that with that in mind, this brings us to the end of our session.
Well, thank you all for joining us today. We really appreciate it. Have a wonderful rest of the day during the rest of our presentations. A lot of great content coming your way.
Enjoy the no-code day for financial services industry.
Well, thank you, Andy and Andy. I'll talk to you soon. Perfect. So we will continue our session now with, let me share the screen again. Here we go. So we will continue, and as a reminder, so these were general presentation that you've seen right before. Now we will go through our tracks. So you will have the choice depending on what areas you're interested in following with, tailored presentations and talks. I will personally host the consumer banking track, but you also have for now business banking and customer experience. And also for the second half of the event, we will have the other tracks on lending, governance and compliance that we've talked also briefly with both Andys right before, and corporate functions. Perfect. So I will transition to the consumer banking, and I wish everyone to have a good session on the track that you are going to attend to. So now we will talk about consumer banking. So for consumer banking, what we want to show you through also the next presenter is to give you a guide also on how you can, for instance, enhance your retail lead acquisition and improving customer retention, how you can increase offer acceptance with artificial intelligence recommendation, and also streamlining workflows, for instance, around new account opening and other types of workflows, particularly around the consumer banking theme. And so on consumer banking, here we will talk with TCS, Tata Consulting Services, who's one of our esteemed partner. We will also have a talk and testimony from one of our customers at OTP Bank. Have one of our partners as well talk around, tips and insight on how to roll out a no-code platform for consumer banking. And last but not the least, you will also have a peek with our product evangelist from Creatio on artificial intelligence capabilities. So for this first track on consumer banking, where we're going to talk about 3 focus areas to help hyper-personalized world-class customer experience with retail banking. Our next host is Sanjeev Agarwal, who is an experienced marketing strategist and marketing solution provider. So Sanjeev is working at TCS, Tata Consulting Group, that I'm sure many of you are aware of, which is one of the largest IT consulting and implementation services firm in the world. And Sanjeev, as he's a technologist, is going to share his background and experience around automation technologies, how he has helped, banking worldwide and financial services and also insurance companies be more digital driven and digital ready. And I will also now give the floor to Sanjeev for this next talk.
Until about a few years ago, I had no clue what this customer experience is all about. In my multiple roles at Tata Consultancy Services,
Hi, Mike.
My job was all about technology and data. So I used to see everything from a technologist lens. Well, I was happy. I was doing good. I could deliver some large, complex IT and data programs in banking by then. But then something happened in 2015 when I was asked to build a team of usability consultants and interaction designers. And that ask changed my perception of my own career itself. From a technologist to someone who knew absolutely nothing about design, human perceptions, and human experiences, it was a big challenge for me. But at the same time, a good turning point in my career. And then of lately in 2018, I was asked to manage a digital marketing business function that allowed me to put everything into practice. Whatever I learned about automation, about data, customer experience in 20 years of my career. So my name is Sanjeev Agarwal, and I work at Tata Consultancy Services. I had a function called BFSI CMO initiative. It's a global function, and we work with the chief marketing officers in banks and insurance firms on their digital marketing priorities. So my journey in the last 6 to 7 years has actually been from an IT guy to a CX enthusiast. And that's what I'm going to share with you today about my experiences during this journey and some of the lessons learned that possibly would be of value to you. I want to thank Creatio, first of all, for giving me this opportunity to speak about the topic which is very close to my heart. I'll try to do justice to the expectations of the audience with whatever best I could explain about the techniques of hyper personalization for customer experience. All right, so let me set the context of customer experience first of all. And I want to start with my own interactions with my bank. Here is this large bank, very popular one, and they do not offer me a mortgage these days. Possibly they know my score, the credit score, but they do offer me an education loan, and that's very interesting. Somehow they now know that my daughter has to go to college next year, and that makes this conversation contextual, right? So well done. And when the relationship manager has to meet me, they don't call me directly on my phone. They will send a message, fix up time. That's another good point. They appreciate my preferred channel, and they also know my preferences, right? So that's another good job. So these are the touch points that they did pretty well. Of course, privacy can be debatable, a bit intrusive about my daughter, but it's okay. At times, customers can manage sharing some of the details for the sake of our own experiences. Interesting thing happened when I called their customer care. Now, I had some issue I had to deal with, and I called them, and I was explaining my issue. And the person on the other side, they were having this conversation absolutely by the book, as if they are just reading the script, and that didn't work well. So and typically that's a deal breaker for quite a few of us, right? Now, if you look at the overall experience that my bank is giving to me, there are different channels. I use their mobile app. I use telephony. I call their call centers. They send me emails. So these are the touch points, and they are doing pretty well. But possibly the experience across the channels is not consistent. So that means they got to work on their customer care center, right? Who can be more contextual to me. So that's the experience I had with my bank. I thought would be relevant to start with. I think quite a few banks are in the same state. Of course, the maturity can be different, but you and me can relate to these conversations. So I'll say that our behavior is changing. The customer behavior is changing very fast. Unfortunately, the loyalty is decreasing equally that fast, right? Now even governments are promoting financial portability, like the mobile portability. So how do you take care of your customers then? Well, enough case studies are now talking about the brand experience that can enable a transition from a satisfied customer to an emotionally connected customer. I was going through a research on financial services firms. They said that emotionally connected customers exhibit less price sensitivity, higher brand advocacy, and much higher customer lifetime value. We all know retaining a customer is much easier than acquiring a new customer, right? So why experience is, I think, a no-brainer now. Being a human, we give more importance to our perceptions than anything else. We are happy to pay a premium to our service providers for being relevant to us and our needs. All right, so then what is it that we need to do so that our customers feel more connected with our brand and they stick to us? And more importantly, where to draw a limit on personalization, not to make it that intrusive as well. Okay, so I thought I'll be splitting this conversation into two parts. We will be talking about the elements of customer experience, and then we'll move to the levers of enabling that customer experience. So allow me a moment. It's a simple sequence, nothing great about the sequence itself. I thought of using it for giving a structure to our conversation. And another thing, you may hear a lot of marketing terms in my conversation, thanks to my current role. My invitation to you is to relate to it, to the job you are doing in your organization that is impacting your customer experience, either directly or indirectly. All right. So coming back to ABCDE, I want to talk about people first. So A stands for actors. People who are responsible or accountable for sales or marketing or services, right from the CXOs who are defining the strategy to the level of customer care agent who is talking to the customers day in, day out, right? Then number two, the brand itself, the organization itself. What is the vision of the brand, the values of the brand, and the promises of the brand, and how much you and me are aligned to those promises as the stakeholder of that brand, right? All right, so the next one is C, stands for customer. Who are your customers? How much you know about your customers, their demography, their persona, their intentions, preferences, actions, behaviors. What are they doing online? What are they doing offline? How much do you know about your customers? Then moving on to the delivery of your products and services you are offering, you are giving to your customers, whether online or offline. What are the channels that you have enabled for them? For example, for a mortgage customer, the buying journey is typically not fully digital, right? So there may be some dark funnel as well. So are you really sensitive about where are they buying it from? How are they buying it from? And are you addressing all those touch points or not? And last but not the least, the experience. What kind of experience you are giving to your customers across this journey at each and every touch point. So these are the elements I thought to put in perspective. We are going to talk about these elements and then talking about the levers that will leverage these elements, work on these elements to bring in the hyper personalization in customer experience that we are talking about for a bank or for any organization for that matter. Of course, banks need to deal with a lot of regulations, compliance, but I'll try to keep it generic so that it is relevant to everybody who is joining us today. All right, so moving on, we spoke about 3 pillars or 3 levers of achieving the hyper-personalized customer experience. As I said, I'm a technologist by heart, so I want to talk about data and technology first, and then of course we will go to the culture as well. Well, anybody who is talking about customer experience these days, I think we'll first talk about the data, right? So let's pick up these levers, these pillars one by one, and let me start with the data first. So talking about data, I think the core of personalization, as I'm calling it, you as a bank, you are having a wealth of data which is available to you, right? Customers' demographic data, their preferences, their behavior, their location data, their transactions data, your third-party data. Then open banking is enabling a lot of access to additional data set for your customers. So you have a good data set. And even your customer is also usually okay to share some level of personal details with you for their personal experiences, right? So I think the first step to take is to check whether you have the right CRM in place to hold all this data together, and that too across LOBs. And then moving to a more mature state of stitching all this data together. Well, it is easier said than done, I understand. But thanks to no-code, low-code CRMs like Creatio, you can move faster in your journey, right? So data is important. Cookies are demising. You may be thinking about converting your third-party data to your first-party data. So once you set up the right CRM in place, the data holding place correctly, then you move to the next level of having a customer data platform where you can stitch all your data together to create a single profile of your customer. We call it customer 360, right? So that is like setting up your data roadmap first, and then fixing some of the issues. And once your data side is well managed, then you can actually move to what we call segmentation one-on-one, where you can leverage the power of that data to run your geo-targeting campaigns. You can focus on specific areas around a specific branch, if you will, and you can leverage Google or Bing location or call extensions, map makers, so on and so forth. I mean, there are plenty of things you can do to hyper personalize your campaign for your new customer acquisition, let's say, right? And interestingly, I find that very surprising that not too many firms are leveraging location data in their acquisition strategy. Okay. So, and then moving on to, let's say, retention, cross-sell, upsell with the help of next best action frameworks. Your customer care can be more contextual in providing personalized offers real time to your clients when they are calling them. And this can help you move to the next level of what we wish these days, the segment of one. Then moving on, you have gathered a lot of data, you have run campaigns, so you can leverage the data by running your analytical model on top of data. My preference, my suggestion would be find your sweet spots first, your most valuable customers, and then put all your efforts and money on nurturing that segment first. And then, go to finding their lookalikes and then move to the next segment. And typically, that should be a logical sequence in my view. Of course, you can learn from your experiences. You can refine your models in this journey to enhance your effectiveness or, and enhance your customer experience further. And lastly, but very important aspect I want to highlight is to take care of your consent from the customers. You must have an ethical data usage framework so that you do not get into compliance issues. And this is more important for the banks these days. All right, so talking about data, I can relate to one of our customers who is a North American bank. Sometime back, they were facing a similar challenge to understand the channel preferences of their customers so that they can be more contextual to them. So they had a lot of data available to them for utilization. We worked with their 5 years historical data, created a few forecasting models on top of that. And interestingly, the results we could derive was almost 95% accurate in predicting the customer preferences. So that was really an interesting outcome. All right. So this is about holistically about managing your data well and really working on the core of personalization first. Then I'll pick up the technology. Well, I'm a technologist. I speak to a lot of customers about their enterprise stack, their MarTech stack, and so on. I can tell you technology at times can be fascinating and overwhelming while we leverage technology very well these days. But the major problem I see these days that quite a few banks are dealing with a legacy stack which is coming to an end or underutilized stack, which they don't know how to leverage. So the first thing that we do when we go and meet our customers to really understand where they are in this technology journey. And, I think the first and foremost important point from an automation standpoint is to fix this challenge. One example that comes to our mind when we spoke to them, of course, mix of legacy debt and underutilization of their stack. We could improve their service capability by almost 50%, and their branch NPS increased 3 times. So my suggestion would be rational. Do not keep buying technologies just for your immediate ease only. You got to rationalize your investments. And by the way, it is not only the CIO problem. The chief marketing officers, chief digital officers, risk officers, they are also investing equally into the technology, and they got to be sensitive about their investments. So quite a few places, our first job is to actually speak to these stakeholders and fix this problem of the ideal technology stack that they should have. Okay. Then once that is set up, then you move to the next enablers like customer journey orchestration or building real-time interaction frameworks, enabling omni-channel experiences. Another example that comes to my mind is that there is an Australian bank, customers of ours. They wanted to be more contextual to their customers in providing the right offers at the right channels. So we worked with them in implementing an adaptive decision manager. And again, interestingly, we could help them deliver 50 million next best conversations across channels. And this implementation boosted their NPS by 12 notches compared to their competition. And so there are similar such interesting engagements that we did to reduce the customer journey abandonment or increase the customer engagement. One such case study that I was talking about was actually a very good highlight in Adobe Summit as well, some time back. So there are enough evidences that the companies providing omni-channel or opti-channel to say enjoy much higher conversion and much higher revenue growth. Then we saw last year there was a huge volume of calls and requests and queries for the banks, and a lot of banks, they enabled their self-service channels, which is really good. Mobile apps, chatbots, community portals with good user-generated content. This will not only reduce your load, but also gives a sense of control back to your customers. And that helps you improve the experience that you are providing to your customers. Then moving on, I see a question here. As there are many tools related to marketing technologies, how can a brand decide which tools are right for their businesses and strategic imperatives? All right. Well, my take is every organization is unique. I'll go back to what I said earlier. My experience specifically in CMO space is that either there is a legacy debt or underutilized stack. So before you invest heavily in one single stack, or even you have invested already, my recommendation would be to get an assessment done first of all for your current state, and then define that optimum roadmap suitable for your organization. I hope that answers your question. All right, so that's about technology. I'll move on. The last pillar is the culture. Now, I think building empathy for our customers is the need of the hour. Pandemic has already made us learn enough. McKinsey also says that 80% of customer touchpoints are digital these days. Still, the conversion is 25% across these digital channels, right? So, which effectively means we do not know our customers as well as we want it to be. And again, I know it's not easy to understand the precise needs and behaviors of your customers, but there is something you can do to get closer to that. So in my view, the first and the foremost thing is to define a custodian of customer experience in your organization and empower that role with hierarchical authority. I know quite a few of our clients, they have appointed an individual CXO level role, chief customer officer or chief experience officer, and they are doing a wonderful job in driving the customer focus in collaboration with other CXOs, right? So number two, we have been talking about agility for many years now. Of course, it is important. We got to be more agile, specifically now when the dynamics are changing, technology is moving very fast, low code, no code platforms are shifting more power to your business stakeholders, which is a good disruption in the ecosystem. I don't think there is a logic of building 5 years roadmap, 3 years strategy nowadays. You got to be more agile and flexible in shifting gears if required. All right, the next one is how do you train your staff who is aligned to the customer experience objectives, enable them with the right tools to decide in real time what is right for your customers. Define their KPIs consistent with the experience outcomes. I can say the weightage of the first call resolution KPI, you may put a higher weightage than the average handling time now. Measure effectiveness at each touch point to ensure a consistent experience. Mind it, another important aspect to understand, the sum average of the experience across touch point you are able to achieve may not be sufficient. It doesn't work like that. You got to pick up one channel at a time, measure the experience, improve the experience, and move on to the next one. You are dealing with humans, so you can't average it out like that. Okay, so that's all about culture. And let me take a question I can see in my window. How can we measure customer experience effectiveness? Okay. Well, there are many popular KPIs in the industry for measuring customer experience quality. My opinion is you can pick up any KPI for that matter, but the most important aspect is to find opportunities to know your customers better. And then you can leverage either the standard KPIs like CSAT, NPS, loyalty participation, recency frequency. There are many such KPIs that you can consider, or you can define your own KPIs as well. Since now you know your customer better through the power of data, define your own KPIs that can justify your efforts for enabling that experience. And avoid vanity KPIs. That's my suggestion, so that you don't get into a false sense of achievement. All right, that brings me to almost the conclusion of my conversation. Culture is important, and you got to see how you are creating the right balance of technology as well as the personal touch while you are providing even the self-service channels to your customers. Okay, so if I just summarize it, customer behavior is changing rapidly. Spend your energy and time in understanding your customers better. Align your organizational culture towards that. And then there is a lot of power of data and technology that you can leverage to master the skills of customer experience. So I want to thank you, Creatio, once again for giving me this opportunity. And thanks to everyone who was listening to me. You gave your time and patience generously. Thank you so much for that. I hope it was a value to you, your time and the patience that you showed. Thank you very much. Have a good day. Take care.
Into an agile and customer-centric institution with the help of no-code. So we're going to have two speakers here. One is going to be Constantin Maris, who's working at OTP Bank. So OTP Bank is one of our customers, a major bank in Romania. And Constantin is an executive director of IT, PMO, and transformation office. So he has had recognized success to launch new operations and turn around teams, proven ability to grow the bottom line and improve business processes. His areas of expertise are around operational excellence, transformation, digital transformation, of course, working closely with startups, merger and acquisition, growing revenue and profit, amongst many other assets he has. And the second speaker is going to be the director of sales enablement here at Creatio, Eric Hell, who's been working closely in the software industry with a lot of customers for over 20 years and have a deep understanding on financial services, outcomes, challenges, and goals. And we will have a live conversation between Constantine and Eric.
Excellent. Well, for today's session, we have Constantine Mars, who is the Chief Digital Officer at OTP Group. Hi, Constantine. How are you?
Hello, I'm fine. Thank you very much. Very glad to be here with you.
I appreciate you being here. So maybe we could start with a quick question. I know that the OTP Group is one of the largest, or is the largest independent financial service provider in Central and Eastern Europe. What do you guys attribute your success to?
That is correct, Eric. Actually, OTP Group went very well through the crisis, and we are one of the fastest financial group that recovered in terms of market cap and in terms of stability of the capital position and so on. And the markets and the clients appreciated that and continue to give and allow their trust using our services. And the second part of the success was due to the very successful acquisition strategy that OTP had in the region. We went over 7 integrations. All of them were done successfully, not only from the merger point of view, legal merger point of view, but also from the integration of the customer base of the 2 banks. And this allowed very profitable and healthy growth of the group in the region.
Excellent, excellent. And it's good to see and good to hear that as well. So Konstantin, tell us what prompted OTP Group to embrace a software-driven innovation and overhaul your entire IT infrastructure throughout the entire organization. What prompted that move for you?
First of all, what I explained earlier, the need to grow was one of the main drivers of this software innovation process within OTP. And banks' main assets today are information and trust. And that is why banks become more and more similar with a software house. And their ability to stay close to the customer is very much dependent on the ability to change and to be near the customer. And this prompted the software innovation that you are mentioning.
Mm-hmm. So why did you decide to go with a low-code platform for process management and CRM?
So as mentioned about the growth several times already, also in Romania, we wanted to have a very aggressive growth. We want to double the market share of OTP in Romania. And that is why we are looking for improving the customer experience, and we were looking to improve the processes. So we are looking at the tool to integrate process management capabilities with CRM, so to be able to understand better the client, to target better the client, and in the end to serve better the client. And this is why we looked in the market and we decided to start the cooperation with you a few years back.
Mm-hmm. Great. And yeah, it's been great for our relationship. We really look to OTP as one of our flagship customers. And if there are other banking industry professionals listening to this, what would you say are the biggest benefits of low code for financial institutions?
I think there are 2 benefits that I would like to underline. First of all is the time to market. We are able to go with changes for the customer much faster than before. And we are talking about significant changes, not just iterative changes. And that's the first benefit, being able to be faster, to respond faster to the customer needs and changes of the market, regulations, and so on. The second benefit is the fact that we can do such changes on our own without depending on the vendors, on the big software houses that have their own limitations and interests. So the fact that we don't need to build really to copy another software house in the bank, this is one of the key benefits. We have, of course, a team of programmers and analysts on the IT side, but the cooperation with business is much easier because we are talking the same language.
Mm-hmm.
So I think these are the two.
Yeah, I couldn't agree more with that. I really believe that low code does bridge that gap between business and IT, and really promotes collaboration throughout the organization. So when we look at your use of the low-code platform, what business benefits have you been able to gain? What KPIs have you been using to measure the success of the program?
Yeah, so I will not repeat what I said earlier, because obviously we gained time to market, faster time to market. We are able to deliver changes much faster. But one of the main pain point that we addressed was the bureaucracy. And we are looking at the customer experience, and we are measuring NPS, we are measuring TRIM scores. So one of the key driver and success indicator for us, for the bank, was to improve the customer experience. And we are able to do this by using the platform that we built together. And another important factor was to be where the customer was. So the traditional approach is to have a list of products and services on the shelf and ask the customer to come to your office and do business the traditional way. What we changed is that we wanted to be where the customer is. We wanted to be where the need for the customer appeared, and this was also an important indicator to be where the customer is and to understand what is his need, and not to push something from the bank side, but to understand his need and being able to respond to that need. And this was another important change that we had. And I would say the third factor, because a bank has a very complex infrastructure. We are talking about hundreds of applications. Some banks have even thousands of applications. And then the effort of integration becomes a nightmare. And what we are able to do was to standardize the processes, standardize the communication between the back office and the front end applications. And this standardization really helped us with the faster deliveries, with getting to customers as I said, faster, but also controlling the cost of the integration with the other systems.
Yeah, I think you brought up some really important points there, Constantine. When we look at customer experience, it can be the last true differentiator for financial institutions. And with so many competitors coming from different areas and different, fintechs and online banks and traditional banks, all of the competition that we see, you have to be able to differentiate yourself. And I think that that's what OTP does very well. It is that customer experience that's going to gain you new customers, retain your customers, and then also the services that you provide. As you mentioned, so many points of integration. Every other quarter, there's a new application rolling out, and you need to be able to adapt to that very quickly. So, thinking about that, like future technology and future, plans, what do you think are the next steps for you in your digital journey?
So, first of all, when we are talking about the banking customer, this customer does not compare OTP with other banks only. They are comparing OTP with Facebook, with Google, with any other interactions that he's having on a mobile phone or another technology platform. So we really have to be on the forefront of the user experience and making the interactions with the bank seamless for the customer. And this is one of the things that we'll continue to do to understand what the customer wants and to make this interaction with the bank seamless. And we'll improve continuously on the user experience side. Another area that we'll look at is the extending what we already did with the online onboarding and extending loans completely online on the legal entities. So we'll address micro companies, we'll address SMEs, and we will extend such seamless services not only to the private individuals, but also to the companies. And the third thing I would like to mention is that we've seen that the need of digital services increased during the pandemic and even after. We want to, said earlier, to be where the customer wants us to be. And we will launch video banking services. So we launch a series of other services just to complement what we have in terms of channel and product offering, and ease the interaction of the customers with the bank, with the bank.
Mm-hmm. Excellent. And as you went through this journey of transformation, were there any lessons learned? What would you do differently if you had to do it all over again?
I'm not a modest person, so I would say that I would do everything again like we did. And I will explain. When the pandemic started, we sit together at the table with the board of OTP, with the key stakeholders, and we look what do we have to change now that the customers are not visiting branches, what we need to do, how we need to reposition ourselves. And actually what we decided is that we will not change anything from our strategy, but we will only accelerate the initiatives that we had in our plan. And that's why we launch faster the online onboarding, where the customer doesn't have to visit the bank in order to become a customer. We eliminated the wet signature. We replaced everything with digital signatures. We offer the possibility of the clients to have loans online, again, without visiting the bank. And I believe this is the winning strategy for us. Of course, there were elements that we could do better and faster. And I can even give an example of how we started our cooperation many years ago. I think it was 2017. We started to work in a waterfall methodology. And after months discussing around document specification, we realized that this is not the way we can be successful. And together with Catherine, your CEO, Catherine Kosterova, and your team, we decided that it's the time to change the approach. We went into agile methodology. We started to work in sprints. And maybe a change would be to start faster such way of collaboration and give up on the traditional waterfall way. And other than that, I think we have the winning strategy, and we are confident that we have the right people inside, we have the right partners, we have you, and we have some other successful partners alongside. And I think we have a winning team.
Mm-hmm. I would definitely agree with that. I think we've had a successful partnership, and we look forward to continuing that in the future. So if we had what advice would you give to any financial institution that may be considering embracing low-code strategy? What advice would you give them? Where should they start? What would be their best course of action in your opinion?
Yeah. So I think the first advice I would give is that there are no silver bullets, including the low code. I think it's very good technology, very good platform, but don't expect that everything will be done by the business. So you have to be prepared to sustain the business with some business analysts, process analysts, and even some programmers. But after you do this, things will align much faster, and then the developments are implemented faster, and customers are happier because there is a better understanding between the different players within the bank and also outside the bank. And the last advice I would give: always think about the customer, about what he needs, not about what you want to sell. And I think this changes completely the paradigm, and the customers will notice that, and they will be happier, and they will come to us, and they will stay with us. So these are the things.
Absolutely. And I think that, customer experience is definitely improved with low code. And I believe, especially in your industry, it also helps the employees as well. I notice when I've talked to, any financial institution, the amount of applications that your frontline employees have to kind of manage in a single customer transaction can be overwhelming. And I believe that low code brings that all together. The combination of low code and CRM brings that all together for them, giving even them a better experience so that they can service your customers better, right?
Yeah, that is correct. Actually, one of the main goals of implementing our solutions that we work together upon was to free up the time of the sellers, of the branch employees, to let's say free up their table of operational tasks, reporting tasks, bureaucratic activities, and give them more time to interact with customers, to talk with customers, to sell more, and to connect more and bond with customers. So this was indeed one of the key gain of implementing our digital strategy.
Excellent, excellent. Well, I believe that brings us to our time, Konstantin. Any parting words for the audience before we wrap up?
Thank you very much for being here with us today. I am very glad to be with you, Mike, and with your team. And I believe that we started, as I mentioned, our cooperation about 4 or 5 years ago. And this was the first collaboration like this that really changed the landscape of applications in OTP Bank Romania, but also the approach, as I mentioned earlier. We are thinking about the customer, and the cooperation with you was really the centerpiece of turning around the bank, changing the approach, and becoming more successful in the relationship with our customers. So thanks a lot. And I wish you good luck to continue to do the great things that you do, and help us serve the customers better and gain even more customers.
Yes, absolutely, absolutely. And it's no surprise that you are the largest financial institution in your region. And I think it's just because of that. You put the customer at the center of everything that you do, and good things happen, right?
Thanks a lot for the feedback, Eric. That's correct.
All right, Konstantin, have a good day. Thank you.
You too. Goodbye, everybody.
Great. Well, thank you, Konstantin and Eric, for this session. For our next presentation, I am happy and honored to have Sam Biardo with us. Hi, Sam. How are you doing?
Doing well.
Great. So Sam is the founder of Technology Advisors and Starfish ETL. So Technology Advisors is a digital transformation consulting firm that works closely with Creatio customers and a lot of other customers. But of course, today we're going to talk specifically around consumer banking organization and how to roll out a no-code platform for your consumer banking functions. So Sam, I'll be happy to give you a quick intro if you don't mind. And we were talking about that right before starting the session. So Sam created and started the Technology Advisors back in 1991, where his goal was helping customers to improve sales, marketing, and customer service operations. Since then, Technology Advisors has grown tremendously in the digital transformation space into supporting customers in deploying low-code and no-code solutions. And so Sam has tremendous experience implementing dozens of CRM solutions, workflow process automation, just to name a few, and is working daily closely with customers, especially in the financial services organization. So Sam, I'll be happy to hand it over to you. I'll stay connected with you, and I'll take some questions at the end, and I hope we'll have the time to address them. If not, I'm sure we'll be able to provide some response directly.
Well, thank you. Yeah, in fact, we hit for our website, we counted last year, and we had over 1,100 implementations of CRM in our history as a company. So we sort of understand it. We're going to go to the next slide. Okay. If we can, hold on.
Sure, go on. I believe you will be able to showcase it.
Maybe I should share. Maybe that's the problem. Okay.
No problem.
So yeah, someone else is sharing right now. There we go. So this is what we're going to basically talk about. What are the most common uses we see banks and credit unions do? What major functions? A little bit drill down into them. And then I really want to talk about why people have projects that fail and how low code prevents that from happening, and how we prevent projects failing by reducing the level of risk associated with that project. And so the most common things, I just picked 10, but we see banks asking for is everyone wants a 360 view of the customer. And actually, this is not true for banks, it's true for everybody. Everyone wants a 360 view because no one likes to be blindsided no matter what their job is. And everyone wants the opportunity to help grow the company. So giving them a good picture of what's going on truly helps them turn your entire employee force into salespeople. The next two we see most common are issue management and complaint, or case management. I've separated them, and you'll see why later. The next three are all about selling, cross-sell, referrals, and offers. Loan is on its own, and typically we see that people want to know a lot of information about loans and credit limits. Then the next one is event management, and then the last two are sort of linked, service level agreements and document management. So let's look at the 360 view. The 360 view of the customer really deals with someone coming in to their low-code platforms such as Creatio and pulling up a customer's name and understanding who's in their household, understanding, do they have a safe deposit box, what accounts they have, what loans do they have a line of credit, do they have a debit card with us or a credit card with us? And that's really just a sort of snapshot view. And this is going to be used later, because if I'm in a cross-sell role, I can look at that customer view and say how many customers we have who have a checking account but don't have a debit card or don't have an ATM, and literally look at it from that perspective. So case management, I remember I told you I broke it up into two parts: complaints and issue management. The way I look at it is issue management is I have to have a resolution. Complaint management doesn't necessarily require a resolution. Complaint managers is things like, I had a bad experience, or you changed the hours but didn't tell us about it. It's nothing. It requires maybe a letter or an email going to that person, but it doesn't necessarily require a resolution. It's more about documenting bad or unpleasant experiences. Frankly, you could expand this and also document good experiences, but I find no one ever tells you they've had a good experience. It's always only about the bad experiences they have. Issue management is something that is actually wrong. It's not following our processes, not meeting our SLAs, and it requires it requires opening a case of some type, maybe routing it to the appropriate person in the organization so it can be fixed, and it requires feedback to the customer who opened the issue. My three selling ones are the cross-sell, the referral, and the offer. Cross-selling is, they have a car loan and you make a suggestion that maybe they could get a checking account with you so that they can have an auto pull out of the checking account for their car loan. And obviously, as we all know, the more instruments or accounts that they have or loans that they have with us, the stickier our customers become with us. So we really would, cross-sell is something you want to do early on, particularly if they only have one thing. The second part is referral. They come in two forms. Someone calls up a help desk and says, hey, I want to get a loan. Who do I talk to? And it gets referred off to a particular loan officer or a branch. The other form, though, comes in the fact that you're mining data and you're saying this, we have a new customer who signed up and he's a CEO. And we did that by mining data. Let's hand him off to the commercial banking department and see if we can not only do business of this personal business, but maybe their business as well. The third one is offers. We get offers from banks all the time for a free credit card or credit card with low interest. And so, examples of that might be someone loses a credit card and now you offer them one with fraud protection that may cost more. So those are the three different types of sales functions we tend to see the most. For event management, this is, the person who's at the farmer's market or at a fundraiser, maybe a Rotary event. This really is about tracking the events, making sure the employees show up at the events, documenting the hours in the schedule, making sure a checklist that is for preparation is performed. That could be, making sure the space is adequate, getting the hours of when you can get there, providing the swag or whatever the event is. I know we don't do a lot of live events, but I'm very hopeful. And then what's it going to cost? What's our expectations from the event, and have we met those expectations? And then document management finally is really managing everything around creation of a document to linking that document to a particular account and to then point to a customer as well. Maybe tracking the signature, where is it in the process? Maybe you have an SLA on how quickly it has to get signed or when it auto terminates, and then managing the terms of that contract and associating that with that customer. So I like to talk about why projects succeed, not why they fail. And they succeed primarily because the management supports them. If you can't get your managers to support you, you're not going to ever have a successful project. I've never seen one succeed without management support. But with management support, then there's other things you need to do to have a successful project. And one of them is getting, first of all, the staff needs to see that what you're doing in the new system is going to make their life easier. If they're going to make their life harder, they are not going to use it, and you're going to lose on adoption. So whatever you implement, you have to not only have management support, but you have to make everyone's life a little simpler. You have to get the employees to provide input because they have to take ownership of this eventually. And by getting their input, you help them get ownership. And then one of the great things about products like Creatio, low code, no code tools, is that we can actually do experimentation. We can create a trial process. We can create a prototype of something we'd like to see pretty rapidly. And then we can demonstrate it to internal people to see if they feel it actually improves their experience with the CRM. And this is something you can't do with a traditional CRM, because the traditional CRM means I'm getting requirements, I'm sending it off to IT, they're going to put it in a schedule, we might see it in 3 quarters. So this is the great part about the low code side. And then my advice to everyone is train, 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 and train. There's no such thing as not enough training. And I point this out because we frequently see training as one of the cost cutters that people make. And I always look at it as that your sales team is typically one of the highest paid of your organization. And if your sales team is the highest paid and you're not going to train them, how can they be successful, right? So never cut training. In fact, because that's all it's going to do is going to make them use the system more, which is going to make them more successful, which is going to make you more successful. And then don't rush into the next phase. Get feedback so I always like telling customers to wait a couple months between phase 1 and phase 2. And after about 30 days, get some feedback and ensure you incorporate that feedback. That may be changing a process. That might be moving a screen around because it's easier for them to do data entry or to look at information, but get their feedback and add that into your continuous improvement process. So less is more. And this is really the success. And there's some great math behind it. And being the nerd that I am, in fact, right now I'm actually reading a book about mathematics for fun. Think about that for a second. We're going to talk about the mathematics side of why less is more, because you don't want to take my word for it. You want to see it expressed as a formula like I do. So math is more because it's all about this. This is risk. And I don't know if anyone knows this, it's not probably something common knowledge, but being a math geek, I do. Actually, this is the core of probability theory. Probability theory was created by the French in the 1640s, and they did it so they could better understand sports betting. So that is an actually true story. So they invented an entire part of a discipline of mathematics. And basically what prop risk is about is that if I have risk and I have 5 or 6 things that are all risky, to get the overall risk, you multiply those together. And by risk, I mean on time and on budget. If it's not on time or it's not on budget, then you have a failure. So success gets really sort of strange. If I have 100 use cases I'm trying to roll out, whoops, maybe that 100 use cases, look at the probability curve happen as the use cases get applied. You have basically a 37% chance of this project succeeding if everything you're doing has a 99% chance of success. So that really should enlighten you on how this formula works. And so one of the advantages of implementing out-of-box features and one of the advantages of producing low code is that you can get you never can get 100%, right? But you might be able to get 3 9s in risk, okay? And so what I did is I redid these graphs and said, well, let's assume that we're going to increase our success rate by 0.5%. Well, what happens is that that 30% now goes to around 60%. So you've actually improved it by 1/3 just by bumping this up by 0.5%. And that's just critical when you're thinking about breaking it up. Now, if everyone remembers the old coin flip thing, right? If I'm going to flip 5 coins, right, my chances are 2 to the 5th that I'm going to get all 5 of his heads. But if I got the first one heads, the next chance is 2 to the 4th, the next chance is 2 to the 3rd, and then it's half, right? So the probabilities reset when the outcome is known. And if you think about how phasing projects go, if you break these down instead of 100 use cases into 5 phases of 20 use cases, notice the probability never goes below 90%, and they reset themselves when they go to the next phase. So this is why I say less is more. It's the math side of it, which is you really want to keep things in small groups. And when we talk about the math side, I do risk analysis a lot on bigger projects. And what I find is that, and we have some formulas like, if it's a feature already in the box and you're configuring it, we consider that, 99.9% because we already know the vendors vetted it. We know that if it's a small customization, it's probably 99%. But when you look at things like integrations where those come in around 90%, I see customers trying to do 5 integrations at one time plus a bunch of use cases, and you look at that and you say they got maybe a 20% chance of getting this on time and on budget. And so when you sit back and think about deploying things like the 360 view of the customer, the a loan management program, cross-selling or sales, you got to think about can you put those together to minimize your risk so that you can have a successful phase. Because we all know if the first phase isn't successful, it puts a lot of pressure on the project afterwards. So that is my simple presentation for banking and how I would deploy. And I think I left myself enough time for questions.
Well, I would love to have asked a question or two. The good news is you're already starting answering one of them, which was, how you maximize adoption. And you did say experiment, train, have, sponsorship from the management. Unfortunately, we're going to have to wrap up for this session, but I'm happy to see you soon, Sam, and we'll have a live conversation with, more in depth. And I also, as you were sharing, I also wanted to share more insights, especially on your math formulas. But it was, I think, a very original angle to see that there's the technology itself, but there's also the organization, the resource that you put yourself to maximizing success. So thanks a lot for sharing that, Sam.
You're welcome.
We'll talk soon. Perfect. So now I will share my presentation again. Here we go. For our next session, we will have Alex Petronenko. So Alex Petronenko is our product evangelist here at Creatio. He's one of our technical experts, and he has extensive experience in business analysis, business development, and we're going to talk particularly for his expertise around low-code, process automation, and CRM technologies. So he's going to show you how you consider your next best action or next best offer, which are artificial intelligence capabilities on how you can leverage no-code and AI to help you predict your customers' wants and desires. So I will hand over the floor to Alex, and I'll see you in a short moment.
Thank you for joining the No-Code Day in the Finserv industry. My name is Alex Petronenko. I'm the product evangelist with Creatio. And today I'm going to be speaking about the next best action, next best offers, right? How does no-code technology support the prediction of the customer needs with literally no code involved that can definitely empower and bring forward the ability and capability of the end users in any bank or organization, any financial institution or insurance company in actually finding the next best offer for their customers. And how we're going to be talking about the NBA and NBOs in Creatio is through a live demo of our products and seeing how exactly can Creatio support these processes. So let's move to Creatio's BFSI build, right? And of course, like with any other day in a life or scenario, where we usually start is with our beautiful homepages that are built on our Angular framework, right? And we already have started receiving a lot of positive feedback from our customers in how these new ways of presenting the data can support the day-to-day operations of any users, right? We can see how flexible they are, how actually visual they can be and represent the data. And of course, one of the ways that we actually address the NBO and NBA within Creatio is actually even through the process of searching for the customer data, right? And picking them up with our consultation panel to streamline the operations of the end users, whether they are working remotely, whether they're going to be actually working from the branches. So regardless of the fact that we have some specific, action items of the consultation panel and have a quick summary of the customer, right? What is quite important and quite critical is when accessing the profile and the customer 360 of the bank's client data, right? We can actually, on the left-hand side where we've got the profile of the record, already see that we have a specific number of next best offers already available for this customer, right? And in this case, we can actually drill down to the NBO, right, we can see that within the 4 products, we have the highest rate and highest level of the match, right? And this is really then allowing us to quickly review the conditions of these products being issued, right? What are the benefits for the customer? And as well start some relevant and related processes straight away within this record, right? And within this view. So definitely we for sure see that this is bringing a lot of efficiency, a lot of operational excellence to our end users that is helping them to actually perform an upsell a lot easier, right? And this data, of course, is delivered with the help of our machine learning models and AI predictions. Now, of course, we need to keep in mind that this data is also always available within the products area and product views, right? This is where we as well can just start some of the opportunity management processes, application processes directly from the record of the customer. But let's speak a little bit about the functionality and the technology that stands behind it. Now, first of all, definitely what I need to mention here as a vendor in CRM space, right, together with the low-code application platforms, one of the areas of the development for our AI machine learning team is also the development of how the data can be easily visualized for the end users. And this module for the MBO, what we've actually looked at, is just one of the ways that we can incorporate the simple visual access to some of the functionalities to the end users. But moving forward and kind of going back to the area of conversation that we were before, what is the technology standing behind it? Now, in this case, we actually refer to the machine learning models functionality, right? And the ability to create different types of data prediction within Creatio. As a vendor, what we're focusing on is on actually the ability of our customers to implement their own data predictions around recommendations. And this is the exactly NBO and NBA, right? Predictive scoring, the probability of the lookup prediction or classification, right? Numeric prediction as regression, and text similarity, searching for similar data across multiple instances of the same objects. And the way that we're actually delivering these later on, as you can see, is a full drag and drop, more even point and click style of configuration, right? There's really no need to go through some extra level of development, incorporating data scientists into the operations of the bank or the BFSI organization in this case, right? And really try to somehow understand what would be the impact of these predictions. What we're actually filling in as part of the configuration is on the left-hand side by choosing the recommendation dependencies, object to recommend to, the recommended object, right? How we're actually going to be defining the recommendation dependency column. And later on, we can actually then review what is our expected accuracy, right? If we actually need to have some additional consultations being provided by the customer success management team from Creatio. And of course, links to the Academy to support and streamline the onboarding of this functionality. Now, from there, of course, as we're looking into the settings and the parameters of this model, we can see that within simple filtering conditions, we can define which records should be included into the training data set, right? So how do we actually define a successful sale and close of the products to a customer so that later on the system can actually take the dependencies and similarities between different customer profiles, between different applications, different opportunities, and find these matches and possible matches in the upsell, right? And as you can see, all of the settings around extending the filtering criteria is reusing our filtration module, right? Delivering this consistency in how different users can use different settings across the system using the already acquired knowledge, right? And all of the related settings are actually as well delivered through more of a configuration setup even perspective, right? So moving forward, we of course can talk about advanced settings. We can talk about training of this data, right? And adding some additional nodes and really some comments across the organization. What were the change parameters? But the idea here is that the configuration of machine learning models within our no-code technology is really no-code, right? There's no development required. There's no need to go through a lengthy implementation process, right? And trying to figure out, so where did you make a mistake? how to fine tune this. You're literally working with a friendly, clean, crisp user interface that allows these designs being completed at a very fast pace. And of course, moving from here, right, the model itself is just the configuration of the prediction. But how do we actually then trigger this prediction? And the idea here is as well coming from the perspective of using the business process management engine in order to have a more agile and flexible delivery of these models. What do we mean by that is that within our BPM engine, we can actually configure very complex processes that are going to be streamlining the operations of the users. And within this model, from the settings area, and when we have the elements panel, we can actually take the prediction element, right? And in this case, we simply choose the type of the machine learning model that we want to incorporate. For example, our contact product recommendation, right? And only need to define how we're going to be predicting the data across the sections, right? Or across this machine learning model. So the idea here is that within the BPM engine, we can actually configure different types of processes that could be based on the timer basis, right? So actually be executed through a schedule. These could be the processes that are going to be executed based on some specific data signal, right? Or even by a manual start by the user themselves. And from here, of course, this model is going to be executing the prediction around the next best offer, the next best action, depending on the configuration of this model, depending on the use case. So kind of reinforcing the message that the configuration of the models, the data prediction should not be a hardcore, difficult, heavy lifting style of development configuration, and then really tying them to a very narrow set of use cases that somebody has kind of identified as desired state, right? With Creatio's technology, configuration of these models, then the reusability of these models is going to be delivered in a very fast pace, adjusted and tailored quite quickly moving forward, and then of course reused across different use cases and different user stories, right? So every time that we're moving across a stage in an opportunity or an application, perhaps we want to repredict the NBO and see if maybe now we can upsell according to some of the new data that has been received, right? So this level of flexibility and accessibility and access to the AI and ML delivers the whole mantra of no code, agility, and acceleration across all of the products that we can actually provide as a vendor. So that was a very quick, short demonstration around the AI capabilities of our products. I really hope that you guys enjoyed this quick demonstration, right? And you also agree that this is how different organizations should be using AI and machine learning models. And from here, let's probably answer some of the questions from the audience that we have. Okay, so let's see if we have any questions coming in. And I do believe that we have someone asking a few of those actually. So let's see. First of all, what are the key enablers of the next best action? Well, this is a great question. The idea here that the next best action requires a lot of planning and a lot of good data that would be actually used as a basis for the recommendation for the data prediction, right? And the idea here is that in the very beginning of your journey, when you might not have this data available straight away, so what you could do is actually start using the recommendation systems model in the state that it is, right, based on the data that you have, but then actually to fine tune it, to retrain the model and deliver a better quality of the data prediction, right? And of course, Creatio's technology is always there in order to support these processes. Let's move on to the next question. Implementing innovations such as no-code and AI for enterprise companies is quite a long-lasting process. Our company needs to change the mindset of hundreds of people. What would you recommend for faster adoption? Well, in my personal perspective, the user adoption, and this is something that we actually share across the organization as well. The user adoption is one of the key factors in any implementation of any application, any technology, right? And in order to deliver a higher rate of user adoption, first of all, you need to start with a good base, with a good kind of a core product offering, right? That is following consistent design style, that is following consistent interface, consistency in how the data is being presented. And of course, you need to deliver very fast results as phase rollouts to your users. In order to keep them engaged, right, just so that they're always eager to learn something new about the system, some new use cases, but also as you're going to be implementing these phases and these quick rollouts, you're going to start receiving feedback from the users, right? You're going to start hearing them areas that they like, areas that they perhaps are not fully satisfied with. And what you could do and should be doing really is that with low-code and no-code technologies, you would be able to quickly address that feedback, right? Let's say somebody says that this specific field should be in a different place and in a different type of data visualization on the dashboards, on the home pages, right? So quickly fine-tune those, quickly change how the data is being presented, just so that with the next rollout, right, with the next kind of delivery of the changes, they see that they have been heard. They see that these changes have actually taken place, right? And this is actually going to excite them because they're going to hear that they are heard. They're going to see that that the company listens to their feedback. They will feel valued, right? And this is exactly what you should be doing and how they should be feeling, right? And as soon as they're going to get this feeling of being valued, they're definitely going to have more eagerness to use the system, to use the product, and this will result in a happy user and higher level of user adoption. Okay, let's move on to some other questions that we might have. What is the difference between AI and machine learning tools? Is there any specific recommendation where to use one or another? AI still, okay. So the idea here is that the difference between AI and machine learning is very simple. AI basically stands for artificial intelligence. Everything knows that, but this is really the definition of when a machine is performing human-like actions, right? So mimicking some of the actions that a real human, a real person would do. And machine learning is more of a human brain on steroids that really is processing largest amounts of data in a very short time, and perhaps even processing data that a human mind is not capable of even embracing, right? So try and find similarities and try and find trends and common signs in hundreds of millions of records, right? And this is definitely something that you cannot perform yourself. So from the kind of positioning standpoint, again, AI is more of a mimicking of human actions, machine learning or ML more of a finding trends and common areas across different products, across the data. And I believe that at this point, this would be all of the time that I would have for this quick session. Thank you all so much for your questions. Thank you for sticking with me on the NBO and NBA overview with Creatios, low-code and no-code technology, and hope to hear from you soon. Bye-bye.
Great. Well, thank you, Alex, for sharing your experience with artificial intelligence with no-code technology. So we're wrapping up the first half of the day on our dedicated sessions. I hope you had the chance to get some answers and insights and key takeaways on how you can accelerate your organization and leveraging no-code technology and also to align business and IT with this technology. So the recording of today's sessions, if you logged in late, are going to be available on our website and YouTube channel for about a month. Of course, if you have any questions, Creatio is here to help. You can also try our Creatio Creatio version 7.18, which is our latest release of our no-code platform. And you can have a free trial for 14 days. So feel free to give it a try, and you will see areas. We have a CRM offering around sales, marketing, and service operations. We also have a studio, Creatio, which is our no-code and business process management engine. So feel free to give it a try and share your feedback. Also, as I was sharing, feel free to log in and subscribe to our YouTube channel. We do regularly share content and organize webinars. Of course, today we're talking about financial services, but I'm sure you're going to find some interesting customer testimonies and presentations. And last but not the least, we also have a global event, which is our Accelerate No Code Revolution event that is taking place on November 9th and 10th, where we're going to have an extended panel on several different areas, of course, focusing as well on financial services. So feel free to register, and you will also most likely have the different links in the chat and registration event. Perfect. So I will see you in 12 minutes. We're going to take a short break and start again around 1 p.m. Eastern, and you will see as well different tracks. And I will be hosting the governance and compliance one. So we'll see you in a short moment.
Perfect. And welcome back. Just getting back from the first half of our day. We've had some great conversations and we're excited to really step into the next part of this journey, right? So you talk about accelerating no code and what that revolution means. And kind of this is something that we really embrace at Creatio. Looking forward to walking you through this part of the event. So little talk track, what we're going to be covering today. We're going to be covering lending, loan recovery, and payments. You talk about kind of improving decision accuracy, internal collaboration, thinking through implementing kind of digital lending process from the ground up and shortening those approval times while really leveraging automation. You got a good agenda of individuals today. Just to kind of give you an overview. We've got to start with George Guri, who's the founder of Facilitation. He'll be covering how no-code technologies are transforming the lending experience and recovery functions and altering the future of payments. From there, we'll go into kind of a session around a fireside chat, creative technology, really rethinking the digital workflows with Michael Meyer. At 1:40, we'll transition to new realities into retail lending, 5 ways to win. And we'll close it out with kind of our product evangelist of head of pre-sales, simplifying debt collection and loan process with no-code technologies. So we'll start. Gurjit online.
Yes, I'm Thomas.
Pleasure to meet you, sir.
Pleasure meeting you too.
Yes, very excited. So you're going to kick off a session and I will be here. And if there's questions, I will certainly share them with you.
Sure. Let me share my screen. I think, okay. Can you see my screen?
Yes, I can.
Good. Thank you. Thank you, everyone. So my name is George Guri, and I mean, from my background, I come with 25 plus years of experience in information technology and application in the banking sector. And I come from a development background, and really my first job as a programmer was the development of an object-oriented loan application program back in 1995. And I think without going into various details, since there, I've worked across various process-driven related applications in banking. Something I wanted to highlight, I mean, working as a CIO of Intesa Sanpaolo Bank in Albania back in 2008, I started and led paperless banking initiatives with a focus to centralize payment processing using BPM technologies. Then after starting facilitations, we've been working for over 10 years into a number of projects that are related to customer servicing in banking, core banking platform implementation, as well as loan applications origination, recovery originations, and also payment processing and workflows into optimizing straight-through processing, but also level of authorization in the payment products. So I think I would like to keep the last 5 minutes for any questions that might be raised. So I will be going quickly on the first topic, which is what we've seen so far as the driving forces of change and innovation across the European markets. At the moment, we operate and serve banking customers in 7 different European countries. And what we have seen across our customer base is that there is a current external factors, especially COVID-19 pandemics was a very strong force that are pushing financial institutions to explore a number of pathways on their business. So we do also see, and especially that's true in the payment industry, but also in consumer lending, that the raising business volumes are also driving a need to optimize certain processes in order to be able to tackle the volumes in a more efficient way. It's been before, but there is always a demand for reduction of operating costs. So how efficiencies and productivity can reduce operating costs. Then especially, I think due to the COVID and the hybrid work model of working from office and from the home settings, the matter of operational efficiency has become more, has come more into the spotlight. I mean, really, it was a must and a business continuation to work from home, but it's going to stay. So operational efficiency remained very important. And then one important aspect is the digital growth versus the legacy growth in the retail sector. I think a number of banks have understood that the legacy growth can give you a proportional growth in business into number of customers, number of loan application processed, number of payments processed, but there is also a digital growth. And the digital growth factor is exponential. The competition to have digital growth are also coming from non-traditional financial industry players like technology giants like Amazon, Apple, and other giants that are entering into financial services, but there is also a competition between traditional players that have either established new digital banks and that are focused on digital servicing through the customers, or are rapidly moving towards innovation and being able to offer a full 360-degree customer service via digitally. Now, surely there are challenges, and when we're thinking of challenges, the greatest challenge still remain is a complex regulatory compliance environment. So surely local regulators you have to deal with, as well as global regulators. On some key areas here that are impacted from regulators is the electronic identification and trust services for electronic transaction. Then there is distant marketing of consumer financial services regulation. The property sector has its own guidances as to how properties are being registered and whether it can be digitally contracted and signed. There is, in Europe, we do have as a constant the GDPR regulations, and there are a lot of regulations that are related to the credit reporting. Another challenge that banks face is the existing, there are still a large majority of banks that run on monolithic core banking system and standalone applications that are hard and very time consuming to integrate. And we also see that though in terms of the retail sector or other private business sector, there is a number of APIs available that could bring efficiency into process design. When we are talking about accessing public or other necessary services, still there are difficulties. Either APIs lack or their access is not that easy to build and to even contract. Moving on, I think what we have seen as typical need coming from bank and consumer expectations, short time to market in order to quickly create a positive and sustain the positive impact is there. Everybody wants to see a result from a digital transformation strategy, and without seeing result, momentum is not created and sustained. There is a clear push to enhance the user experience and improve the internal efficiencies for loan origination and servicing to the end customer. There is a need to have end-to-end integrated workflows to really enhance customer experience. So it should start from the customer touch point of origination to the internal approval process and also to the final communication to the customer. And that's not only related to the first interaction of approving a loan, but also through the whole life cycle of servicing, how all the interaction happens with the customers. APIs, I mentioned before, are a very important aspect in order to build an efficient process. predictive analytics are important to improve evaluation of credit worthiness, drive profitable loans, and lower the cost. We've also seen, not that often, but it's very important to have robotic process automation to really faster the speed to market and enable transaction transparency and lower cost. And the back office digitalization is an area of importance in order to have more efficient operations. What we have seen as a long-term success factors, the first one is the single and the customer-centric digital process automation platform for all products and services. So whether you're talking about retail or commercial loans, collateralized or not, or payments, being able to have a unified digital with a very friendly and efficient UX, so have a single point is very important, not only for the customer, but even for the citizen developer and the operational teams and the customer servicing team in banks and financial institutions. Things need to be easy. The selection of the omni-channel platforms remains very important. The ensuring that process-driven certainty and transparency is very important aspect when you're thinking of a long-term transformation and building loyalty with your customer base. The intelligent, scalable architectures that are easy to adapt and to process changes, offer easy and low-cost maintenance with decoupled architecture for rapid new product development is a very important and strategic choice for an IT platform that each financial institution do or plans. It's a really very strategic investment because it will have to support all the other aspects of the digital journey. The easiness and simplicity of the platform to implement changes is another important aspect. So, I mean, the whole point of a strategic choice is how you adapt a flexible and scalable platform that provides a decoupling of the technology and architecture. And I think the no-code technologies play a very important role. So it should be a strategic decision to choose a platform that offers the no-code capabilities. Going to some of our practices as an implementer and system integrator, we have seen that the payment processing is important in terms of being able to deal with new payment networks. So what we have seen across the last 2 years, that there are a number of new payment networks compared to traditional our low value payments or high value payments, typical networks in different markets and SWIFT, but there are a number of other players that banks and financial services institutions integrate. So surely there can be various and different entry points from where the payments are being received, and being able for different payment networks to maintain consistency through a very well-defined process, but also often offer flexibility in terms of how certain approvals for different payment networks for different type of transactions are being obtained, and also to provide efficiency for simple operations in a complete digital manner. So how preferential foreign exchange rates for cross-currency transactions is going to be improved is very important. So you need to have a unified framework, but at the same time, you need to be able to adapt a personalized workflow for different networks or different customers or different source of payments initiation channels that are coming in banks. One recent project that we're running with a customer of ours in the Creatio platform is the possibility to have an innovative workflow that provides an interaction between, I think, the consumers, retailers, and bank, in order to instantly onboard the customer and approve the loans digitally. So you might see a traditional typical workflow of application, and three key important steps that are made are enabled from the no-code technology in an efficient aspect are the customer e-identifications, the document validations through government portal, and surely exchanging data with credit bureaus. But one important aspect in order to enable a digital experience to the end customers who can buy the service at the shop and have also the loan approval would be the contract e-signing. So the whole workflow, this is a case study that we're building, is very important. So the integration and the capability to integrate quickly via APIs, various players, and be able to define workflows and scoring systems that enable a quick approval process to provide a nearly digital experience to customers, not only when shopping online, but even when going to a shopping mall or at a retailer. It's a very, I would say, interesting offering, but it is also judged as a strategic differentiation strategy from our banking customer. And one last interesting business case coming from the corporate and SMEs collections that we have worked before is also the aspect of the hard recovery. So being able to integrate and being able to have a constant monitoring on hard recovery as to what's happening with the court, what's happened with the bailiff. Now, these regulations tend to change from one country to another, and I think it's very important to have a no-code and a very efficient platform that enables a model-driven development and a rapid application integration in order to adapt processes and build agility within the organization. So that is the last slide and the last three use cases I wanted to bring to you. I'm open for any questions that might have come from the audience.
So I'm very excited to see as you continue to develop those use cases out, leveraging APIs in certain spots that can add value rapidly, right, and open up information and data. At this time, I don't think we have any questions. So I think from here, we'll transition. But I want to thank you personally. I really enjoyed your presentation, and I'm looking forward to seeing the results of some of those case studies.
Thank you very much, Thomas.
All right, sir.
Cheers.
Thank you. So now we're going to open up.
Hello, Tom.
Joined by Andy Zambito. Good afternoon, sir. And we have Michael Meyer with us. Let me go ahead and share my screen. I believe we are sharing right now.
No,
they're not sharing. Let me just make sure we're properly.
There we go.
You see my second screen? Yes, sir. Perfect.
We do.
So very excited to do this introduction. Fireside chat really centered around creativity and technology as you think digital workflows from loan recovery with no code. Michael Myers held many titles from Chief Risk Officer to Chief Innovation Officer. He's got a master's degree from Georgetown University in technology, 20 plus years experience in this space. He's joined by Andy Zambito, who's the Chief Sales Officer at Creatio in the Americas. Really in his role as well, leading a lot of these conversations as you start to talk about digital transformation at scale. So very excited for this opportunity to join you both. I will step back and let you facilitate that conversation.
Well, thank you so much, Tom. I really appreciate you doing that. And thank you so much, Michael, for joining us today. As Tom had mentioned, I've had the privilege of working with Michael just about almost a year now. And Michael's long, illustrious career has always been at the forefront of technology. We were just chatting prior to coming out here from, early days of in the military intelligence and using technology in that sense, to now really being at the forefront in the debt collection space and being 21 years with MRS BPO. So, Michael, thank you so much for joining us today. I'm sure the audience is really looking forward to your insights today.
Thanks. Glad to be here.
So I have a series of questions. I'm sure we won't get through all of them, but because I'm sure you can expound on them for quite some time. But I'd really like to start with just understanding, in your perspective, how can financial services firms use digital platforms to succeed in this new age that we're in and we've been talking about all day so far?
Well, I think a lot of people know about the customer-facing aspects of digital technology. One of the hardest things for all companies, but especially financial services, because they deal with a lot of data. And one of the cool things about Creatio is the no and low code. If you think about it, most companies, IT was an island. And if you wanted to do anything, you had to go to IT. But with a tool like Creatio, all employees now can become business technologists, I think is the right term, or an analyst. They can get access to data, they can use data, they can actually help automate their jobs to be able to do things. So that is a huge enablement from an employee perspective. And on the back end, a lot of financial services companies are connected to a bunch of vendors, but often they're connected to a huge back end, kind of like monolithic vendor that's handling all of their processing. One of the promises of fintech was it was going to change everything. But that promise, until very recently, has not been realized. And really in the last year or so, you're starting to see major changes all over where technology is now layered on top of each other, almost like by a platform on top of a platform in order to accomplish something. So that particularly the digital enablement of a financial service company is truly seeing massive changes. You've seen all these different apps, all these new offerings come out to be, and all of that is possible through the digital technologies and enablement that's happening.
That's great, Michael. So I guess the inverse of that, I question your opinion of, what are the risks associated with firms that don't, adapt to this, that go the non-digitization route? What risks do you see?
I think history shows that when companies don't keep up with technology, when they don't embrace technology, or when all of a sudden they just sit on their heels and say, you know what, nothing's going to change. We'll let someone else, do things, and we don't have to adapt. The digital technologies are enabling companies to adapt faster than others. So if you don't begin today, and if you haven't begun already, by not embracing digital technologies in multiple aspects of your business, you're going to be left out. As an example, if you only embrace customers, those companies that are embracing the changes for their vendors or other facets of the business, those companies will succeed. So those companies that don't adopt it, don't embrace it, and we saw this during the pandemic, right? Where companies that didn't spin faster, did not pivot faster, did not embrace it faster, they were left out when they saw their revenues decrease, and some of them went out of business completely.
Absolutely fair points. So, we get often asked about the adoption of the organization, the reaction to this. In your experience, was it easy or difficult to get organization-wide buy-in when referring to, of course, to these digitization initiatives that you've been speaking about?
Well, we began before the pandemic, and as did a lot of companies. And the pandemic, of course, everyone says, helped accelerate it. For us, we were several years in. We had begun the digital journey probably about 4 years ago, where we began all of the different customer outreaches, and we began changing a lot of our core infrastructure. It's more like a snowball, right? You know, you begin it and you've got to get buy-in from all of the executives, all sectors of the company in order to do it. At first, it's not easy, you know, and typically it might be driven by operations, it might be driven by IT, it might be driven by finance, it might be driven by, you know, a specific vendor via a new contract. Whatever the initial driving force was, in order to do it right, it really has to be embraced across the company. So it's a hard discussion to begin, but it must begin.
Thank you, Michael. Let me go on to a little bit different topic. When you think in the larger spectrum of the digital age we're in now, are you seeing any downsides to it?
I would tell you that, you know, the thing with digital is that, you know, mistakes get magnified. You know, it's very easy in the old days, you would make a change and that change didn't necessarily have a wide ranging ripple effect that the changes that happen now do. So the flip side to that is being digital enables a lot more different types of compliance, rules and regulations, technology to be in place. But really, I would say it's the magnitude of changes. It's really easy to have a wide-ranging mistake. And probably a good example of that is Facebook. Look what just happened yesterday. You know, they made a change. Too
soon, Michael, too soon. Please.
You know, it's one of those things, you know, one little change can ripple all the way across and have a massive effect.
Yeah, no, that's absolutely true. We're all facing it in their entire businesses. I think we're down from that. So it sounds like obviously you're a believer in all this transformation. And so I'd like to talk about it in terms of something you mentioned early on was about aligning around customer needs. What would you articulate are the key focus areas for a digital leader that really they shouldn't miss if they want to ensure getting that kind of ultimate result, that maximum benefit around using this transformation to align customer needs?
Well, you know, the old word is really omni-channel. You know, you've got all these different mechanisms and ways to communicate to customers. And typically in the old days, those channels were not connected to each other. One of the great things that a tool like Creatio allows is the ability to connect all those channels together, allows you to understand the behavior that's channel specific. And let's face it, no customer communicates over one channel alone, right? It just doesn't happen. Customers communicate over multiple channels for multiple reasons. You know, whenever there's usually a real big problem, customers want to call, right? You know, right. And for transactional things, email might work or a text might work for notification or a quick transaction. So, but other things you may want to go out to a website, learn more, research more, look at histories of something and do it. But as time goes on, those channels all have different characteristics. And it's hard without a digital tool to manage all of those channels appropriately and to optimize them to enhance customer experience.
And I think, Michael, from some of our prior conversations, you know, we've talked about it's not just that there's this omni-channel that you want to hit them in different areas, but that at different times, kind of the texture of that ongoing communication needs to switch channels back and forth seamlessly, as opposed to, you know, I've started through chat, I'm only ever going to stay in chat, right?
Yeah, that's right. And really, I would use the word, it has to be choreographed. Okay. And you know, that's where something like machine learning and AI helps you understand what is the best way to paint that canvas of customer experience so that the customer feels unique and they feel fulfilled, and most of all that you care, right? Because that's what people people want to feel it inside that the company cares about them.
I'll agree with that. And you're bringing me to my next question, because you touched on some obvious, other technology buzzwords, AI, machine learning, and in your role, obviously, you're a technology evangelist. So what are some of those technologies that you believe will kind of be dominating the enterprise landscape here in the near future?
Do we have all day to talk about this?
Unfortunately, no. But
I could go on forever.
Give us just a couple insights into where your head is thinking, and some meaningful nuggets.
Well, I touched on it before, but platforms of platforms. That's where things are built upon other technologies, and today that's becoming one of the most important facets of this digitization and ability to use digital tools like building blocks to accomplish something. That, I think, is critical. Businesses before were monolithic, and they weren't really able to extend and flex and change and do it. So really, businesses that adapt will become like Legos. You can change and rearrange and help it. That's something that's major. The other cool technology is called digital twins. This may not be something you hear a lot, but it's where you can, in essence, build a digital model of something. So if you wanted to figure out what that customer communication would look like, you would build a digital model of your customers and maybe even all the different demographics or whatever it may be, and kind of model it and play with it and see like what happens, what if. Or you could even build an entire digital capability of your business and then play with it and model it. I'll give you a real good example in banks. We've all talked about fintech, and fintech kind of took one little piece, at a time, similar to a Lego block, and tried to do it. DeFi, or decentralized technology, said, you know what? Let's take that bank and let's digitize every single thing and get rid of the people and make it a complete intertwined capability. That is just an amazing technology that is incredible. So platforms of platforms, digital twins, DeFi, all of these are future technologies that are really incredible.
That actually sounds amazing. You're right. This could be a whole topic unto itself. So let's give, for those who aren't as far thinking and maybe are doing a little more catch up, what would be some thoughts or guidance you have about earlier stage machine learning or AI that you kind of mentioned before? If somebody's not as far in the journey to tackle those yet, are there some areas that you think would be some low-hanging fruit or quick wins to get an organization on that path?
Yeah, and I'll tell you, and I'll call it, the old days, you had analytics, and you had all of these different people that were necessary to kind of get a result. Nowadays, with the low code and no code, and like Creatio has the AI integrated with it, you're able to get data and to be able to play with it sooner. And because you can go out and grab data yourself and see it, you can take a look and look at it. So I would say start with the low code and play with it, grab data, see what happens. And a lot of the technologies are enabled directly within Creatio. And I think it was demonstrated earlier where you can always do like a Visio-like sort of thing and just draw it out there and do it. So that to me would be the way to do it, is to play with it. And don't be afraid to fail. That's got to be the overriding, most important technology thing with all of this data is, tools like Creatio allow you to democratize the data. And that means you get it in the hands of everybody. Everybody has access to it. And that's really the greatest thing, is to put that tool in people's hands so they can play with it. So the best place to start with it is get a tool like Creatio with the low code, no code. Let people play, let them experiment. That's where the greatest benefit and value will be from this type of tool and technology.
I really love that advice. So let's stick on I know we're running shorter on time now, so let's stick on that theme of advice. Earlier in the keynote, when we did a poll about asking people where they were in their journey, I think greater than 50% were kind of in that earliest phase. So you've just given some advice about kind of in the early days when they have a low-code technology. Maybe you can give some guidance around how they can manage some of the internal kind of selling and consensus building around the leadership and getting over that initial hump to where this is just part of their business and the way they think, since you're further into the journey than many.
So there's probably a lot of different ways to do it, but one of the easiest, depending upon what level you are in the company, and I think that to some degree, all companies now are becoming technology companies. And that's a realization that is beginning to permeate to all different types of industries. There's an old saying, software eats everything. And I think today that's very true. So probably what I would do is I would find articles that illustrate the person's point and the need to change in their specific industry and forward it and say, hey, this company is doing this competitor is doing this competitor is doing that, and begin to increase that awareness that change needs to happen for survival, because companies that don't change won't survive. So knowledge is power. I would use other people's knowledge because more than likely this individual or individuals or their team, they've tried to get the message out and they haven't been successful. Leverage other people, leverage other sources, get it out and show those articles to make a point to help them, show the technology out there. And a lot of the technology to begin with is at no charge or free to try. Use it and make available demos and try it to prove your point.
So I do have, with the remaining time, I do have one question. I don't know to the degree that you're willing to share any of the secret sauce or anything that you're looking at for yourselves. But when I think of, you've been at this firm, MRS is not a new firm in the space, and you're doing evangelical things yourselves to compete. Instead of having fintech invade your space, you're innovating at a faster pace to kind of put barriers up to others. Maybe you can just share a little bit about how is MRS approaching this technology and some of the exciting things in your future that you see for a space that many people might not be thinking about as the innovator.
So I'll tell you, Andy, it's a great question. And one of the things I think we do differently is we're not afraid. Most companies are afraid to fail. Most companies are afraid to try. One of our greatest hallmarks is we're not afraid to fail and to fail again and to fail again and to fail again until you achieve something. So I would encourage everybody to try something, do something, try the technology, play with it. I love that word because as kids, we try things, we do things, we're not afraid. Use the technology, try it, test it, and don't be afraid to fail. Do something.
Amazing. Thank you so much. This has been a great talk. Let me turn it back over to our host. But one more time, thank you so much for joining us and sharing, Michael, your perspective. I'm sure there'll be a lot of questions we'll have afterwards. And Tom, back to you.
Michael, again, echo a statement. Thank you so much. I really enjoyed your mindset. Thank you, Andy. So as we transition on now, I'm going to go ahead and share my screen. We're moving to the next part of this event here. Give me 1 second here. I believe, Michael, I believe we're moving to one other piece of the event. I don't believe there's any questions. Let me just confirm before we let you go. I want to make the best use of your time. I love your mindset, though, around companies thinking more as technology companies first, and then getting creative, right? Like letting people get in there and challenge themselves and unlock the art of what's possible for you to your individual role. And it's very powerful stuff because nobody knows your role better than you do in your day-to-day, right? And it's one of those things where where change is needed, and being able to leverage that with clicks, not code, is so powerful. And that's why you're seeing that big shift. Let me just confirm with our team that there's no more questions. I believe there's not. Perfect. I will go ahead and share my screen as well. We don't have time for questions. I apologize, Michael. Again, thank you so much for your time. Expect a LinkedIn invite from me, sir, because I truly enjoyed the conversation.
Thank you very much. Thanks
Awesome.
for having me.
Awesome.
Bye-bye.
And we will be transitioning to the TCS team. Just to give you a quick introduction of them, I will be introducing Rajesh Ramar. He's an industry advisor when it comes to banking financial services. He's with TCS. I highly recommend you write that down and circle it because they are an amazing organization that's doing great things in this space. He himself has 25 years experience being a business consultant across the globe, right? Not just in the US. He's had long stints at financial centers in both the US, UK, and the Middle East. I'm really looking forward to his presentation, and I will go ahead and kick it off to him.
Hello, everyone, and thanks for taking time to join this session. It's a pleasure talking to you all on this platform provided by Creatio. If you look at the year 2020, the short-term borrowings, or what is called as the buy now, pay later, the new kid of the block when it comes to retail lending, has done about $97 billion of business. That's expected to rise twofold in terms of market share over the next 2 years. Another example of what's been happening the last year or so is the amount of funding which is done for green and sustainable finance. For example, the worldwide debt to sustainable finance is about $730 billion. Now, definitely there are changes what we are witnessing as part of the retail lending business. And these changes can be perhaps said is out of the watershed year of sorts which has happened during the pandemic. While we can look at these new realities, the question we ask is, will we be able to predict what are the future changes very precisely? Can we predict them? It will be very difficult to do so. However, I think there is significant knowledge what we have in terms of what's been happening to at least predict what kind of patterns of changes we will witness in the near future when it comes to retail lending. So we'd like to see what those pattern of changes are. And once you know what those patterns of changes are, we should be also able to see what kind of responses we can do. Again, in terms of patterns, how we can look at how we need to respond to it. First, understand this. Let's understand what are the realities today. What are the new realities which we witness in this retail lending business? Broadly speaking, one, it starts with the customers. The customer behavior is changing, but more importantly, the customer segmentation is changing. And how does the segmentation manifest? Typically, we look at segmentation in terms of demographics. But I think today it's more of psychographics which define segmentation. Typically, the millennials and the generations post that who are digitally native and who are also savvy, financially savvy, we think of them as a different segment. But the generations before that, primarily Gen X, for example, they have adopted digital, and hence their behavior also is changing. So demographics is not going to be the criteria, it's going to be psychographic analysis. So behavior is going to define how we're going to segment customers. And that behavior is going to continuously change. So examples of such behavior are, you see more and more of auto sales, auto loans being given to people who are looking at it more as a usage rather than ownership. We have seen in the past few years, short-term borrowing significantly rise. So this trend will kind of continue in terms of customer behavior. The other thing what we also witnessing is the blurring of industry lines. We see more and more industries coming into finance. For example, you see EduTech offering services, and they offer also many of these payments to be done on a multiple payment basis. So they're also looking at lending to small customers for whatever small service, small ticket items are. Similarly, you see OEMs and retailers have always been looking at how they can fund customers. So industry lines are blurring, and it is possible today that anybody from any other industry can look at lending specifically to consumer businesses. And the business of banking has predominantly been on information. And today, the retail lending industry is more a technology-based industry rather than a banking industry. Like you've seen a lot of tech companies getting into retail lending. Technology and information becomes the key for running the retail business. You can actually put together all of the different components required for that for the retail business using various technologies. The other thing, what we also have seen in the last couple of years is sustainable lending. There's a lot of focus and consciousness within the bankers and the lenders to look at sustainable lending and financing inclusive projects as one of the means for their corporate responsibility, but it's also become a part of their central strategy as well. Lastly, we also look at certain events. If you look at the past 2 decades in this century, I think there has been significant amount of churn in the industry, driven by certain events. For example, the .com, the beginning of the century, the 2008 great global financial crisis, and now the pandemic. They're all different events which happen. What is the new reality looking like? Is there different events which will happen in the future? The answer is yes. We would not know what is the nature of the event. There could be a black swan event where you really cannot predict what is going to come up, or what is now being called as gray rhino events. These are events which are very common, big, hovering around the corner, it will happen to you. So these events will happen, and it is for us to be prepared for such events. How do we build resilience in such events which happens in the future? So broadly, these are the new realities which are striking the retail lending industry. And we need to see how we can help harness the advantages as well as deal with some of these risks. So if you look at the strategies primarily to deal with this new realities, broadly the strategies are: one, from a business design perspective, how can you look at your business models? How can you build new business capabilities? How can you harness ecosystems? And from an execution perspective, how can you use data to build in some of the intelligence you want from an organization perspective? And since we are dealing with lending, there is also going to be a significant amount of risk which need to be addressed. So these are broadly 5 strategies under which we will understand how we want to respond. Let's take this one by one. The first thing is in terms of business model. The business model primarily is: how do you target your customers? Who are your target customers? What kind of products and services do you want to position? What revenues do you expect from them? How do you structure your cost, the funding model? What competencies you may need to build? That's primarily the business model. And specifically in terms of strategy here, we're looking at embedded finance. What we call as embedded finance is trying to be there as a bank or a lender at a point when the decision is taken to buy a goods or service, which requires funding. So examples of that is your buy now, pay later, where purchases are made, where you can be part of it. We talked about the edutech, where you can fund businesses, students who want to take in loans for certain courses. You can look at OEMs who are actually now directly reaching out to customers to sell their cars, electric vehicles particularly. So that's where we're looking at how do you embed as part of the customer's journey where the finance is embedded. While we do that, reimagining the functions, the business functions will be critical. That is simplifying the process and getting into instant decision. This is very critical today, and I think more and more banks are able to achieve this capability. And at the same time, is what kind of products and services do you think will be relevant? Today, we are talking about short-term borrowing, or what we call as buy now, pay later, green loans. Tomorrow, the new reality will be a new set of products. The idea is to be prepared for these new products and how business agile you are. So here are specific certain strategies which we talked about from a business model perspective. The ecosystem, while banks and lenders can execute business based on their capabilities, there's only so much they can do. If they're able to harness the capabilities from the ecosystem partners, they'll be able to do much more. Today, if you look at the products, buy now, pay later, every bank in the globe talks about it. The differentiation is hardly there from a product perspective. What banks can do as from a differentiation perspective is build in differentiated customer journeys. And that's where the ecosystem comes in, wherein you can actually create customer journeys which are very specific for a customer. And take the example of electric vehicles. While we want to take electric vehicles and businesses to fund them, we're also looking at how can you create an ecosystem so that the adoption of the electric vehicles improves by putting together a set of charging stations. The bank can partner with power companies to build this kind of infrastructure. So you're looking at extending the journey not just beyond, not just within the financial business, but also beyond the banking space to look at how else can you fulfill the overall purpose of the customer. Other instances where ecosystem can really help is how can you drive operation excellence? For example, KYC today, there are a lot of fintechs like Tink and Plane, which gives you this capability for KYC, which can be much more agile and more up to date rather than doing it internally. Those are capabilities you can definitely borrow from the external world and hence improve your operational excellence. The third strategy is in terms of building cognitive insights, where we all understand AI and explainable AI today being predominantly looked at strategies to build a cognitive insights and a cognitive enterprise, which we feel is definitely a way to go. But there are significant amount of changes in terms of how this has to be adopted. One is these insights has to be real time and it has to trigger real-time actions. Anything beyond real time will make these insights be inactionable, right? And hence, driving real-time insights and driving real-time actions becomes important. And the problem which we also seen in many of the organizations while building AI is the data, the kind of data infrastructure which is there, and creating that data lineage and infrastructure and creating the granular level of data across the value chain is what is important. And creating that infrastructure is key to deliver on any of these things to do with AI. Lastly, we also look at AI more not just from a customer engagement perspective. How can you look at the full spectrum? Whether it's your workforce empowerment, how can you empower your sales force to better understand your customers and also their business? How do you manage your business performance and also assess the market? So this will help you understand the business as well as customers better. So what we're looking at is how can you execute your business based on the power of data rather than data lying passive. We're trying to put them together so that your processes are governed by insights. If you look at the way businesses build applications today, it's by and large in-house, it's by and large done by the technology teams. We're looking at how can you democratize this. So what do we mean by democratize? We're saying how can you build these capabilities by borrowing capabilities from outside. We talked about in the ecosystem. But that's where we're looking at as a service model. Can you borrow business services from outside the organization so that it's ready to be implemented? Can we build business services not just by the technology team, by other teams as well? And that's the primary goal of a no-code platform. So you want to now democratize, and so that you want to end up building business services rather than building applications. So the focus should be more on the business services. And while we do this thing, business services focused building of capability, what we will end up is building incremental capabilities. So we do not have to look at a transformation, large-scale transformation of 3 to 5 years, but you can start looking at building incremental capabilities which will lead to transformation over a period of time. And while we do this, also rapid proofing can be done of concepts, what we want to do. MVPs and fail fast approaches can be adopted. So democratizing and building this as a service model with a focus on business service will help us be much more agile. Lastly, from a strategy perspective, we're looking at risk management. how do you want to rewrite some of the rules in the way you have done managed risk management? One for sure is that there needs to be a recalibration of risk models, primarily because there is a change in the way historical data will behave post the pandemic. But more importantly is that richness of data, with more and more data coming in, we should be able to better model risks which are there. And a continuous recalibration of risk model based on the new availability of data will be the key. Also, from a control perspective, to manage the risk, what has always been seen as a second line of defense, we are now looking at how can you promote that to the first line of defense, embed them as part of the business functions, so that the risk control is more active rather being passive and post facto. And cybersecurity is always a concern today with the increased digitization. How can you strengthen your cyber defense will be one of the key asks from a future perspective. So we're looking at an adaptive way of building a risk management capability. So finally, putting all this together, we have these 5 strategies in terms of business model, harnessing ecosystem, cognitive enterprise, all of it leading to essentially business agility, building new capabilities, and having a focus on business services, all of which are, I think, very native to a capability of a no-code platform. They give you the agility, they help you respond to business needs faster, they give you the flexibility to adopt to new things. So those are things which are very native to a capability of a platform for a no-code platform. And what we see as the 5 strategies will be hinged on the fact that these low-code platforms will be able to give you this. I want to conclude that with this session with this thought, saying that if you're looking at business agility, we need to look at wholesome from a perspective of planning, from a perspective of culture, and as well as technology build. I hope this session has been useful to all of you, and wishing you all a success in your journey with any of the low-code platforms, specifically Creatio. Thank you.
That was amazing. Thank you so much for your time. I really did appreciate it. Again, TCS is a tremendous partner of ours who has a tremendous amount of experience in this space. On to our next session. We're going to talk about simplifying debt collection and loan process with no-code technologies. Our presenter is going to be Anna Nikotina. So she's one of our head of pre-sales, one of our senior, we talk about technology advisors. She's a former project manager with a background in business and channels development. She's transitioned from the pre-sales role to combine her knowledge and expertise to really help the global sales team earn the trust of some of our key customers and really help them see how they can accelerate their business with our powerful technology. With that being said, I will pass the ball to her and look forward to her presentation.
Hi everyone, my name is Anna. I am head of global pre-sales and I'm very happy to be a part of this event today. Today I'm going to deliver a demonstration of our debt collection solution, and without a moment of delay, I'm going to switch to the actual product. So give me a moment. So what I would like to cover today is the full cycle of the debt collection, starting from the building the 360 profile degree of our client, building the strategy, executing it, and then controlling the results. Now, Creatio itself allows to automate this full cycle, also ensuring that we have proper engagement level from the recovery agents and the managers who are in charge of debt collection via a set of business process, AI capabilities, and also extensive integration capabilities of our product. So when it comes to design and actual focusing our efforts on debt collection, first thing we need to know is who is our clients, what are their interests, what they are supposed to pay, their due diligence, so on and so forth. So for these purposes, we're building these profiles, and the information that we are collecting comes from multiple sources. For the moment, I'm going to switch into the profile of Alexander Wilson to show what kind of information we're capable to store and how we can leverage that to build our buckets of debt collection and how to focus our strategies around the debts and communication cadence and frequency. So our Alexander Wilson is the client of us who has certain debt collection history. But first of all, the information that we can fetch from the CBS, Core Banking Solutions, and ERP, it can also be stored under the debts profiles, including the whole history of the actual outstanding debts, the due diligence of payments, and as well any promises to pay or payments that we have received so far. Now, the next item that we need to consider when reaching out to this customer is the actual channels that he or she is preferring to communicate via, and what are these channels? So Creatio allows to store multiple communication options and define them by the preference and define which ones we will be using in a particular communication strategy. Creatio profiles are quite extensive, allowing us to also record any connections if we are to record the details of family and bank accounts in other banks or other data that can be considered in that collection process. Since we are running all of these communications, we also are capable to store and sort these details in a timeline view, which basically a history of communication in a chronological sequence, including multiple emails, phone calls, and activities that were running in order to collect these debts. We can use this information afterwards to understand how responsive the customer is, and as well to define what will be our next steps, which system also nicely reports and allocates to various employees or our company. Now, since we know this full profile, we are now able to define what are the buckets that we have. And you can see on the screen right now, these are the exact buckets that we're talking about. And let's take a look into 30-day debtors with a certain threshold of the debt amount. The system collects this data from the profile and defines that these are the clients who have their day debts in our funnel for more than 30 days, and their total amount for recovery goes beyond or above certain number. So as you see, the beauty of this that we provide ability not only build segments on the duration, but as well compile various parameters and criteria, defining the volume of that bucket and create criteria based on the amounts of that recovery amount. So the next portion of this planning, we're still into the planning and preparing for the collection, is the ability to build various strategies. So again, I would like to highlight here that Creatio supports the full cycle of designing of a strategy, defining the tools and channels, and as well the approval process, execution, and analysis of a particular strategy. For the moment, let's take a look at the strategy for 30 days bucket for credit cards. This one is designed to reach out via digital channels and to create certain communication cadence and catch all of the responsive clients in order to reach out via agents. So the value that such approach provides is ability to target the less costly channels, include them in a process where the customers actually start responding. So basically, we are making sure that we are sending some digital emails, SMS, and other reminders, and those who we know react to these communications, we are going to call. So this is the focus of our strategy. In the process of planning, we have the ability to run internal approvals to define who needs to control or give their validation that such channels, such budget on reach out will be allocated to this strategy. In the process of execution, when this strategy is launched, we are capable to understand what are the campaigns that are run by our contact centers, for example, and what are the digital campaigns that we have run, including all of various channels. Did we include emails? Did we include SMS or calls or any other tools for reaching out to the customers? So basically, once that's done, we can see the progress of that collection campaign, and understand, let's say, if we have decided to run it for 4 weeks, at what particular moment we got the major response, what was the cadence, which channels were preferred, what were the actual outcomes of collection, and use that data for the next cycles of strategy planning, and moreover, compare various strategies, other understanding which strategy was more successful, which one created more response. Let's say in this case, we are comparing strategy A versus strategy B, how that worked versus the various segments and buckets that we have launched it versus, and then what was our collection rates. So this information can further be, again, used to define how we are tuning our strategies and what would be our next efforts. Now let's take a look into the particular digital campaign that we used to run this strategy. So let's take into the tools and look into the Dectus campaign. This is one of the tools of Creatio where we can define automated process of communicating to customers, to Dectus, without any human intervention. So all we need to do is to define which bucket we're going to include into this campaign, how often or what channels we're going to use to reach out to these Dectus, and then based on that, how often we're going to remind before we move someone to the contact center to actually make an outgoing phone call to remind about the payment. So again, it allows us to focus our conversations, our actual most costly channel towards the customers who are responsive and who we know there is a high chance of that recovery, while those who remain unresponsive, we keep reaching out via digital channels. We don't have to control it every time. The system does that instead of us. He has these nice campaigns. And as mentioned, this is one of the examples of process automation. Now, when it comes to the actual execution of, you see, there are different SMS emails that we sent out. Creatio allows to define templates of messages, uses macro to make these messages personalized. But then when we know that someone has clicked on email or SMS has been delivered, we're actually creating a phone call for the contact center manager who is supposed to call and communicate and define who she or he is speaking to. So for these purposes, let's go back to our strategy and see the actual outbound call campaign. We have many of those, and all of the planning capabilities for these campaigns, queuing capabilities, allow us to define as well which groups out of our contact center are going to be allocated to what particular bucket or what conversation strategy. For example, we have agents who know how to talk to customers who are quite have been delaying a lot of payments. They're hard to collect, so basically hard collection on a certain level. But then we have agents who have very good personal approach, and they need to stay positive with certain customers who are in danger of failing certain payments because they have such habits. Anyway, we have these queues, which you can see on the screen, is another tool how we properly allocate this type of buckets and phone calls to various agents across our team. This one is designed for Dectus and campaigns for 30-day bucket call. It includes the team out of one person or several people can be assigned here. So again, we can choose from the agents, pool of agents that we have. And we define that we will have here all of the debts which come with 30 days. And based on that, the system populates the view for the agent who is supposed to make that phone call. So now let's take a look into the actual backend. So whatever we have seen previously, the strategy and the profile is the way we are planning and controlling that execution of a particular collection strategy or collection on a more managerial level. But then when we talk about the actual agents who are making these phone calls, let's take a look at the different workplace, the agent, which again, I would like to highlight, the system provides a much limited capability of what agent can do here, provides a nice home page where we know the key KPIs of that agent. And then we now have the view of actual phone calls that the agent is supposed to do. So for example, Mary King, that we have seen a couple of steps ago, who is assigned to this queue, will have this list of items, top items that she needs to do. Again, she is only entitled to make phone calls on the queues she is allocated to. So she has debtors, and she may have debts as well. It will be a different set of debts or queue or items, contacts that she needs to reach out. And this can be related either to debts or activities. And let's say these queues can be open or blind, meaning we can limit the agent capability to choose which call to process. On the other hand, it also gives flexibility into defining the workload among the agent and allocating them to different queues, but still considering the priorities of which phone calls need to be made first. Okay, so when it comes to actual execution of phone call, all Mary needs to do is basically click on open and look into details of what she's supposed to do at the moment. So she needs to review data information, remember to be prepared, speak politely. So there's a hint that we can bring down here to ensure certain guidance to the agent. Even though we have a quite comprehensive profile of Alexander Wilson, in the process of agent communication, we provide a limited set of details which will help an agent to understand how to build that communication strategy and how to define what will be the next step. So we have the communication data, we have the communication history, whether there were any emails or any SMS sent or previous phone calls. And as well, we have details of a call script, which is also automatically populated based on the queue or based on the debt or based on the customer. There may be different conditions how we define what conversation hint we are providing to the agent. From here, Mary can go and complete the call, create a new promise to pay, or close it or reschedule, which means there is a level of flexibility so that Mary can define if she takes a new promise to pay, the phone call will be put into the next queue where she needs to remind about the payment. If she's going to close, she's going to reschedule it to maybe another queue to call back later or complete the call. She may take a certain note and just exclude it from any further communications. When Mary needs to know more details about that customer, she can look into the details of debts. And as we see, there are certain types of debts that are outstanding versus this client. And if I'm not comfortable with the information which I see on the screen, there's also always a capability to dive into particular details of the debt, which now I'm able to see that there is the Alexander Wilson who has the mortgage loan. We know certain amount of recovery. There is certain history about the payments and the received payments, as well as any transactions. Creatio is also capable to automate the reconciliation process. And then we also can control the due diligence of customer on the level of promises to pay, whether that has been actually fulfilled or not. Then we also have details around the settlement, which means this data, again, can come from financial system, or we can automate certain level of calculation to understand what will be the penalties or what will be the payment settlement that we agreed on. Let's say if we have agreed that we're going to fetch the customer credit card regularly, and that will help to eliminate these delays in payments. What is the source of payments? Or maybe we made certain reconsideration of the debt conditions or loan conditions, mortgage loan conditions, and we need to record the data versus the debt. So basically what we've seen previously, the agent view is the interface where we have people who are making phone calls, while this screen and this level of information may be necessary, but not particularly for the agent, but definitely is required to the loan recovery manager, who needs to build a strategy not only on a company level, but towards a particular customer and understand where this debt currently stands, what are the next steps. And these are the exact steps that can be allocated to different people across the team. And they can come in combination of a loan recovery manager and as well an agent who needs to remind about the promise to pay. So by this step, I'm able to move across the stages, define whether this is the current stage of my loan. Each of these stages will be associated with a certain set of activities, reminders to me as loan recovery manager what I need to do. And this is a good tool to prioritize which debts I need to work on, and also a good tool to remind and control my engagement with certain customers, especially if I'm in a process of building that relation where I am getting customer committed payment, and I can reflect that and make sure I have that reminder to me regularly and record it. Due to AI capabilities, we are also capable to define for example, the probability of repayment, which is another indicator for me as a company, as a manager, to understand how much effort I would need to dedicate to this customer, considering the outcome I'm going to receive. So this one has 95% of probability of repayment, which makes it very reasonable to communicate regularly. And apart from the agent, who is basically making phone calls, here I can create a phone call, an email, a personal communication touch point right from the profile just by clicking on particular icon. And if I am to send emails, I'm also able to use various templates of the messages. So let's say notices or other templates available across the system, also to simplify my process of reaching out to that customer. Or I can put particular reminders to myself that I need to follow up in certain number of days. So this allows, again, bottom line, that this allows us to create this full profile, not only on the level of customer, but also on the level of a particular debt. And when it comes to understanding of what kind of effort we've done to collect this debt, the system also provides details around the activities, email activities, and all of that in the particular debt, how that related to overall communication. But then the end result of that is basically to understand how much money we have recovered, what is our actual effectiveness. And for these purposes, we have multiple dashboards that we are able to build in the system, combining various types of KPIs, and these dashboards can combine data for a particular role, for a particular user, or particular managerial group. So in this case, for the agent, we can combine details around how much has been allocated or what was the actual target for the collection division and what was the outcome, control that by dynamics, control that by calls, by numbers, and compare that to expected results. For the managerial level, we can create dashboards around more focused on financials, and this will give again a combination of the data that we receive from financial systems and the outcome that we are able to record in Creatio. These dashboards are sensitive to user permissions, meaning that whoever is looking at this dashboard will be able to see analysis based on the data that person is allowed to see. But the end result, we are all able to understand if we are progressing properly in our debt collection strategy and debt collection channels, and are we making our target. So that's it.
Anna, thank you so much. We appreciate that presentation. It's a great demonstration of our technology. As we move towards the end of our session today, I wanted to thank everybody for joining us. A few things I wanted to cover, really. I think it's important to really kind of provide the overview that we're really kind of centering ourselves around empowering end users like yourself. And with that being said, as a company, we're very transparent with our technology, our pricing, and how we approach use cases. So as you see here, really, I encourage you to take out a free trial. I said earlier in the process today, I encourage you to get on our website, our chat, ask questions. We're doing a lot in this industry and a lot of this space, uncovering a lot of best practices. But outside of just this industry and space, also understand that we service across the board. When you talk about financial services, media, advertising, manufacturing, across our entire suite of technology, right? So our sales and marketing service, as well as our studio, which is kind of the low-code platform that we really do on the BPM side. With that being said, the recordings of sessions will be available soon. If you have any more questions, please feel free to reach out to me as well. I could be accessed on LinkedIn, and as well as my email I'll share at the end of this. Really, at the end of it, I think another key takeaway is really just to understand, we're doing a lot of things in this space. We're very active. I encourage you to take a minute, jump on our YouTube channel. A lot of great content there. We post very often. I'm hosting a lot of events upcoming, and I think there's a great opportunity to at least understand what's available in this space. As you head into our LinkedIn and our page, I hope and I encourage you to join us for our next event, Accelerate, on November 9th through 10th. Really kind of embracing that no-code revolution, right? Understanding and empowering end users like yourself, those closest to the work, start to think around that mindset, right? What can I do with clicks, not code? How can I make my job better? How can I accelerate, automate process? With that being said, really, I want to close out and say thank you to everybody. We are more than willing to field and engage any conversation you have and questions. So please don't be shy. Please reach out to us on the chat or on the website. And thank you again for your time. And I look forward to seeing you again soon. Thank you.